Okay, so I'm going to delete everything. I normally start my analysis from the weekly time frame down to the 1 hour for execution. Most times I do my execution on the 4 hour.
Okay.
Yeah, so you'll see this is the weekly time frame. This is the weekly time frame. Overall, price seems to be in an uptrend. Let me take my trend line and let me change the color of this trend. Black. So currently, this is what I'm seeing on gold. What I'm currently seeing on gold right now. So normally, on the higher time frame, I look at the direction of the trend, the overall direction of the trend. As you can see how price was making a series of higher highs and higher lows. But currently, price seems to be ranging, somehow ranging, not like making higher highs. You can see the high there, made a lower high here. So let me go down to let me put another trend line. You can see here. So normally I'm more of a chart pattern trader. I trade chart patterns. I trade chart patterns more. I have two strategies: chart patterns and normal support and resistance, like break and retest strategy.
Okay.
You like wait for price to break a resistance, turn support with nice rejection wicks and all that, then if I enter into a trade. So now I'm going to be marking up my major levels, my major zones, my zones. Let me make this line a little bit smaller. This line is smaller.
Okay.
Smaller. Smaller. Change the color. So as you can see here, you can see how price has been respecting this horizontal level, this particular price level. You can see here it was a resistance, broke above, retested as support. I think I took buys here somehow. Yes, I think I took buys around this area. Took buys. My target was around the 700 pips. Took buys around this area some time ago. Target was around 700 pips. I made a video on that on my YouTube channel, how I took the trades and what my bias was and everything. So probably later I can send you my YouTube channel link for you to check it out.
Okay, sir.
Yeah, so let's mark up the support and resistance level, the horizontal levels. I don't like too many lines on my chart because it's really distracting. So let me just remove all these lines. Let me remove this trend line.
Okay.
Let me just remove this trend line. So yeah, this is
So are you recording?
Yes, I'm recording this. As soon as I'm done, I'll be posting it on my channel and also send you a link so you can watch. So if in case you have any questions, be sure to ask your questions. So these are the closest level. These are the closest horizontal levels to the current price.
Yeah.
I can decide to be marking up all these levels at the bottom and at the top, but price is not close to those levels, so they are not important as much.
Yeah.
They're not that important for now. So let's go to the daily. As you can see, this is the daily chart. This is the daily chart. Let me use this rectangle stuff. I'm coming. Let me look for a rectangle. I don't normally like using this normal lines. I prefer this rectangle. You can see here. As you can see here, this is the rectangle. I prefer this one to mark up my levels, because these horizontal levels are not just a price point. They are areas. They are areas. They are not a particular price point. They are areas in the market. So price may not reverse at a particular exact price, but when you mark your horizontal support and resistance as a level, as an area, you will see how price respected. So
yeah,
let me see. Let me just remove all these lines and better use this rectangle here. You can see how I'm more focused on the current price action. I am more focused on what price is currently doing now, because my overall bias on the weekly Price was actually on a buy, but the current price action it has been ranging. It has been ranging. So let me just mark up. Let me mark up these levels. Hope you can see the levels clearly. Because they're not very... You can see the horizontal levels clearly, right?
Yes, sir.
All right. So let's zoom in now. So what we can see here now, can see how price was ranging. Price went up to this particular price. This 1830 area, fell down, went back again for a second retest. Before price sold, then price sold all the way to the previous lows. Previous lows was at 1680 before price rallied up again. Now, as you can see here, I predicted this sell from this top here. Anticipated this sell. Unfortunately, I couldn't get on the trade. I did not get on the trade. I missed out on that one, but it is what it is. So currently, we can see the current price action is moving down. You can see on the daily here. Let's focus on this particular price action. You can see how price made a high, then it went down to make a lower low, then a lower high. Price broke below again, went down to make a lower low, then a lower high. If I go to the 4 hours now, you will see the chart patterns. You see the chart patterns. These are bearish flags, normal bearish flags.
Yes.
Bearish flags. So you can see here. Let me zoom out a little bit. Zoom out a little bit. So let me bring out all these chart patterns here. You can see these chart patterns. See, make sure your trend line. Once you're drawing all this trend line, you cater for most touches. Most touches. Most people, if they want to draw this trend line, they'll be like, they'll draw it from all here. They'll draw the trend line from here. You can see it is pretty messed up. It's very, very messed up. Doesn't make sense if it is at that level. Although most people prefer it that way, but I prefer to make sure to cater for most touches. You can see here, this is something, it looks more neat. It looks neater like this.
Yes, sir.
So this is an ascending channel. Ascending channel. This is more of an ascending channel. You can see how price was ranging, making higher highs and higher lows within this channel. Within this channel, so you can see here. I didn't post it on Jordan FX Academy. I posted this trade on one other academy I was in because I'm in a lot of academies, like 2 academies. So
wow,
I have 2 mentors currently, but I had more. I had to like let some of them go because they weren't teaching what I was actually looking for. So I had to just like let them go. Started watching some YouTube videos and all that. So you can see here this current price action. Most people would think it is just like messing up. It is ranging. No, it is not. If you look at it, if you decide to cater for, you can see that price made an impulse. This is an impulse move. When price rejected from this resistance level, price made an impulse. Then all these these patterns, these price action here that's like messed up is a flag. Price made a bearish flag. You can see here this is a flag. More like an expanding type.
Yeah.
More like an expanding type, but this was an impulse. This was a correction. I got in on a sell at this level. Why did I get in on a sell? Because you can see price broke below this. This was an overall reversal pattern. This is an ascending pattern. It was a reversal, made an impulse, then a flag pattern, retested the horizontal level as well. So normally, you let price get to particular levels of interest, like a support level, a resistance level before taking trades. It is better that way.
Yes, sir.
Yeah, so you can see here our price was like a support here. For price broke below, retested, made the 3rd touch, the 3 touch. I trade the three touch patterns. I trade the 3 touch. You can see here, this was the first touch. This was the first touch. And this is the 2nd touch. And this is the 3rd touch. So at the 3rd touch, you are expected to take your trade. It doesn't work out all the time. Most times you just make like 2 touches before like flying, but preferably I wait for the third touch to happen.
Okay, sir.
You can see here 1, 2, 3, the third touch before taking
Yes.
the trade. So that was what I waited for before I took the sell trade there. So basically, I even prefer this gold more than those other currency pairs, because gold
Yes.
respects price action a lot. Gold respects price action a lot. You can see how price here, even if you didn't get a clear break and a clear flag pattern, you can see how at this level price made. You can see there was an impulse again. You can see this impulsive move. Then price retested the previous support level as resistance. You can see this is a normal break and retest. This was a break below, a retest of this previous support level as resistance. Then price sold off again. So you can even take this as a sell, because it was a nice setup, very nice one. You can see how price broke below, retested, and went all the way. Let me go down to the 1 hour time frame and zoom out a little bit. It goes down to the 1 hour time frame. You can see here, you can see the pattern even clearly on the 1 hour time frame. You can see it.
Yes, sir.
And see how the patterns are forming. See how the patterns are forming. You can see this. You can see these are very clear. These are very clear signals. Very clear signals. You can decide to take it here. Are very clear signals. I didn't get in on any of these though, because I'm off trading currently. I'm off from trading currently, so you can see here how price
you analyze
it. I do. Yes, I did analyze. I analyzed it, but I didn't take any trades. I didn't take any trades. I did not take any trades. So you can see here, I anticipated a buy. Oh, I think I didn't post it. I think I posted it on the group also. Anticipated a buy set up on gold, and I missed it. I sent out the signal. Let me do that back. So you could see here price. If you look to the left, you can see this arches colored level. It was a strong support level. This level you can see here is very strong level. I anticipated it, but let's go down. Let's go back. You can see here our price reversed from here. Then here as well, it also reversed from here. So I expected gold to actually rally even up to this a level of previous that was previously support. This was how I anticipated it. You can see how price. Was acting here. I also put in my my RSI, my relative strength index for divergence. This was a divergence setup. Then I waited for price action to give me proper confirmation. There was a divergence here. Let me put in the indicator, the RXI, so you can see it. Relative strength index. Okay. Let me put it here so you can see there was a divergence of some sort around this area. So you can see how price was making lower low. You can see here price made a lower low. Price made a lower low, but on the indicator, it actually made a higher high. You can see it. You can see it right there. Price made a higher high. So you can see here, you can put this, let me bring this vertical line. As you can see this cross line that is here. You can see here, if you look down, you see this was the bottom. Price made a low here. Price made a low here, but this was a high. And it came here, made a lower low here, but on the indicator, it made a higher low. That was signaling a possible change of momentum, like the buyers were coming in hard. So I was expecting price to actually buy from this level. Although I missed the trade. I mixed the trade with 15 minutes or so. I missed the trade. I went out to get something, and before I came back, the trade had already left. But this is what it is. You can see here how price, let me zoom out. You can see what price did here. You can see this was a high here. Price broke above it. Price broke above it, retested. This was more like a counter trend trade, because the overall trend is currently on a sell. You can see how price has been making higher lows and all that. But this was a counter trade, and it had very good confluences, because normally before I take any trade, I look for nothing more than 3 confluences. three confluences. First of all,
Okay.
this was a divergence. That was the number one confluence. The price was at a major resistance support level. That was the second confluence. This was a break and retest as well. A break of this resistance and a retest. Those were the three confluences that made me had the mind to want to take the trade, but fortunately, I was not involved in it. So this was what I did, and my target was around this area. This was how I intended on taking this trade.
Wow.
This was how I intended on taking the trade. I was actually waiting for the 1 hour candlestick to close, 1 hour candle to close. It was like, it was left with like 15 minutes. So I just had to go do something in a hurry. Before I got back, price was like already moving hard. So I missed it. This was my initial trade. I don't think I shared it on the group, but I can't remember if I still saved a photo of it. This was my initial trade that I wanted to take. Then this was my second trade I anticipated on gold. Actually stopped me out. I took that one, but it stopped me out before moving in the initial direction. So this was what I was seeing. This was an impulse. You can see the impulse here. So all this price action and all that was a correction. You can see the flag here. You can see the flag here. I actually missed the third touch here. Because normally if I'm supposed to take this trade, I'm supposed to take it at the third touch or a break of the bearish flag and a retest for potential continuation. You can see here, this was the first touch. You can see here, this was the first touch right here. This was the second touch. Yes. This was the initial, this was the third touch. This should have been my actual entry here at this level. This should have been my entry. When I'm trading gold, most times I go down to the 15 minutes to get my entry because gold has a very tight spread. The spread on gold is very tight. Why I don't like trading smaller time frame or other currency pairs, if you start going to the smaller time frame, your spreads will be just like crazy and all that. So I don't like that. Even on gold, if you go down to the 15 minutes, your spread will still be very small to not be too zoomed in. So this would have been my initial entry, but it was messed up. And this was my second trade. I got stopped out on that one. Let me show you in how I found the trade as well. How I found the trade as well. So price broke below this level, although I didn't have much confirmation. That is why it is best to stick to your rules. You need to have proper rules, proper solid rules. Hardcore rules that you'll never break. Probably if I had stuck to my rules, I wouldn't have lost this trade. Because normally I wait for price to retest the trend line, not just the horizontal level. I wait for price to retest the trend line. As you can see here, you can see something similar like that here. You can see something like this here. You can see how price retested the trend line, not just the support, the horizontal level. Price retested the trend line there. That was how I could have taken that trade. Also, I could have taken that trade. A lot of people made money from the setup I dropped though. Although I didn't drop it on the Jordan FX Academy. This was the initial trade setup on this one. Let me just mark it up how I found it. It was a nice TP smash. This was wonderful. I almost hit my head on the wall when I noticed this thing has already my take profit. I was like, damn, I could have been in this trade, but is what it is. Most times you miss on some of them. Most times you just lose confidence in your analysis. That is why if you don't have much confidence in your analysis, better use a smaller like risk management. Like probably if you are using 1% in your normal trades, when you analyze the chart and you don't feel comfortable with it and you feel like taking it, you can use like 0.5 percentage of your account to take the trade. Like 0.5 instead of using the full 1%. You can use 0.5%. So this was my thought process while taking this trade. I took this trade. This was actually, I was stopped out. I got stopped out on this one before price went all the way down to my take profit. This was actually my initial target. As you can see here, because this was the lows. It is better to even target the lows of the bearish flag. It is better, way better. And I planned on swinging it all the way. This was my first take profit. Could have been my first take profit. Then this was my overall target at this level. I planned on like taking my full TP hit on this area, but this was my first target. But unfortunately, the price rallied up. I think there was a news. I missed that news. I missed that economic data. So it came, I think, negative or so for the dollar. So dollar was like messed up a little bit. Core price, I smashed above it, stopped me out before price went down all the way to hit my first TP before going all the way down. So as you can see here, this market actually repeats itself. It repeats itself. You can see here. You can see something else here. You can see something else. So once you've trained your eyes, these things are very easy to spot. Most especially on gold. Most especially on gold. Actually, on this one, I wanted to take this trade, but I was actually waiting for a proper TED touch. This was how I analyzed this trade. This is what I was waiting for. I was waiting for like a pull. I was waiting for price to like come all the way to the top here. Give me the nice touch before taking the sell. But unfortunately, price broke below it and continued all the way down. Probably if I had just focused on this support and resistance level only, I would have taken a sell from here. But I was not in the market as at that time, so I missed that as well, but it is what it is. Probably from next week, that's when I'll be taking trades. But for now, I'm just avoiding the chart because market has really messed me up past few weeks. Market just stopped me out before going into my initial target, stops me out like 2-3 pips and spiked down to my initial target. So I just had to like leave the market because it messed me up psychologically and I had to like let it go. So currently, this is what I am seeing a potential possibility on gold. So currently, price is still in the downtrend. Price is still in the downtrend on gold.
Yeah.
Price is in the downtrend on gold. If you look to the left here, you can see how price has been struggling here. You can see that price struggled a little here. Price actually struggled a little here. So that is what price is actually doing currently. Price is struggling here. So as a trader, it is best for you to leave the market when you don't see anything clear. Like as you can see here, I was seeing this clear reversal pattern, these bearish flags, continuation flag, they were very clear. But currently on gold, you cannot see anything clearly. So probably price is trying to print a chart pattern. Price is currently trying to print a chart pattern. So if you decide to get in late or too early, you get stopped out then before market goes in your initial direction. So currently, for me, I will just sit this one out on gold. I'm currently just flat on gold, very neutral on gold, not even going to think about taking any trade on it for now, because these price action here, they are pretty messed up. You can see the rejection wicks. You can see a lot of rejection wicks at the top here. So what I would be expecting for me, if I'm going to be taking a reversal trade, if I am coming, let me zoom out a little bit. Let me zoom out a little bit. So possibly if I'm expecting to take probably a reversal trade, I'll be waiting for price to print some kind of, where is this? Okay. For me, if I'm expecting to take a buy from this level, I would expect price to come this way, do something like this, give me a third touch for potential buys up until this particular level again. So I'm just going to wait and let price do what it knows how to do best. So you can see here.
Okay.
You can see here, this is what I'll be expecting. You can see here, probably on the third touch, you will also get the divergence on the third touch, mainly on these levels. On every level, you always get a divergence. Divergence setup always happens when price is at major lows or major levels of support and resistance. So for buys, technically for buys, this is what I would expect the price to do. This is what I would expect price to do if I'm going to go long on gold for now, because as you can see here, price struggled a little bit. As you can see here, this big ass move you can see here, this was on NFP. You know NFP, right?
Yes, sir.
Yeah, non-farm payroll news. This was on NFP. I made a little from this, but unfortunately I couldn't get the entire move, which was okay by me because I got a little. I think I made like 100 plus on that day, which was good. So you can see here before price spiked all the way up and started like ranging here. So for now, technically, I'm expecting price to actually, if price form gives me that, if price can actually give me that reversal pattern, the reversal pattern, I'll be looking to go long. I'll be looking to go long if price can give me that reversal pattern. As you can see here, you can even see here, you can see here there was a divergence here as well. So this divergence setup always happens. They always happen. You can see here. You can see how price. You can see how price. Sorry. Just you can see here. See here. Somehow price was some kind of flat here. You can see price was flat. You see this? You see this? You see this? Price made a lower low here. But as you can see on the indicator, price was just flat on the indicator. This is also a divergence because there are a lot of many types, I think like 2 or 4 types of divergence, regular, irregular type of divergence and all that. I won't go into those ones because they're not my field. I don't treat them much and I won't be going into that. So I just trade chart patterns, breaks, and retest. So currently on gold, this is what I'm expecting. This is what I'm expecting. I'm waiting for price to come down all the way here, go back, give me a proper formation, a possible reversal trade. What we can see, this could happen because in Forex, they have probabilities and possibilities. So you don't have to be like, you don't have to stick to one bias. Oh, the price is going to buy, it must buy. Price can actually do the opposite of what you analyzed. So you have to be ready.
Yeah.
You have to be ready. The price could also break below this low, like come here, do a retest at this level, then continue down. It could also, it could do something like this as well. Price could break below this level, retest with now rejection wicks, before continue all the way to the downside. So me, technically, if I'm trading gold, I normally look at the DXY, the dollar index. The dollar index, I prefer to like understand the strength of the dollar. If the dollar is weak, I trade accordingly. That's how I'll take my trades. As you can see here, you can see the dollar index is positive, and you can see the gold is negative. You can see gold is negative while the dollar is positive. And you can see here, EURUSD, price actually moves opposite with the EURUSD. If price is buying on the dollar, you can see here, see how price, I did make an example of how the correlation between these pairs, this market, I mean, because this DXY is not actually a pair, it's actually just a market, measures the strength of dollar to other pairs. As you can see here, you will see the same inverse price action on the EURUSD. Let's go to the EURUSD. You can see here, price is actually doing the opposite. You can see here, price is actually doing the opposite. Come in. You can see this bottom. So you can see how price broke below that support, retested. You can see how price broke below the support level, retested as resistance. Let's go to the gold, to the DXY. Let's go to DXY. Let me take this off. You can see it happens. It's just the same, almost the same exact price action that happens. You can see here, price broke below this support, this resistance level, retested as support before pushing up. So if you anticipate a buy on DXY, then it is sure there's a lot of probabilities that other currency pairs, if you have a dollar as the base currency, then you are expecting a buy on that particular pair. But if you have USD as the quote currency, then you're expecting a sell. As you can see, a GBP USD. Actually, USD is the quote currency there. GBP is the base. As you can see here, you can see USD JPY is actually buying. USD JPY is buying.
Yes.
but AUD is selling. Why? Because USD is the base currency here. Why? On the AUD is the quote currency, so it's supposed to buy. You can see here,
Yes.
it's buying. I anticipated all these moves, but I'm so disappointed. I missed all of them. As you can see here, I missed everything. You can see here, this. You need to understand patterns and a strategy. When you are coming up with a strategy, your strategy needs to be very simple, very understandable, not like you put a Bollinger Band somewhere here. I'll be waiting for the moving average 2 to cross over to the 50. Then I'll wait for the stochastic to go from oversold to overbought, or wait for divergence and all those kind of things. You just mess up your brain. You just mess up your brain. As you can see,
Yes, sir.
Joel always talks about making the price, this analysis very simple. Just draw your chart patterns.
Yeah.
These markets, everybody were aware of this pattern. Pattern traders, they saw this. All pattern traders, they saw this. They saw how price was actually forming here. How price was actually forming here. So you need, in order to be profitable in this market, you need to learn how to not trade like everybody else. You need to learn how to not trade like the population that are more. Because consistently profitable traders, analytically, they are not more than 5% of the entire forex traders in the market. So those 5%, which means the 95% are doing the same thing, while the 5% are doing actually different, something that is different. So in order to be consistently profitable in this market, you need to learn how to do what those 5% are actually doing, and learn to do to not do what these 95% are doing. Because normally, what makes people lose money in the market is psychology. These technicals, no matter how difficult this technical may seem for a beginner, with time you will understand it. Normally, you just put on your support and resistance. These are very simple things to understand. Even if you're trading with support and resistance, you will also see, look at this, proper confirmation. This is even a confirmation of normal support. Even if you didn't have this chart pattern here, even if you were not seeing that, you could see that price bounced off from this place, went up, came back to retest, then went again. You could say, oh, okay, this is a double bottom, or you could say this is a triple bottom. It's also a reversal sharp pattern. You'll be like, okay, market is refusing to break below this level, which means there are a lot of buying pressure. There are a lot of buying pressure in this area. So you'll be waiting for more like a candlestick confirmation to confirm that buyers have already taken over the market. So you can see here, there was an engulfing bar. There was an engulfing bar right here. You can see this was a bullish engulfing bar. You can see how this H1 bullish bar was engulfing this red one and the other bars. You can see it's bigger than the red one. It was bigger than the one before the red one and the one before the red ones as well. You can see how big it was. So this would have been a confirmation to go long. This would have been a nice confirmation to go long. And most times we actually analyze this market, but we are too scared to take it because we'll be like, oh, what may happen? Most mentors are even more confident to like analyze an already played out setup. They'll be like, oh, I anticipated this to buy because it already played. They were like, okay, I would have taken a buy here. The next time, if they see something similar like this, it will be difficult for you to take it because you don't know if it will actually work out like the other one did. You get. So currently on even this USD JPY, this USD JPY, you can see here, if you go to the DXY, I'm coming, let me just put my analysis. This is not the trading view. I actually use this on my current trading view account because I didn't want to delete my already analyzed charts. I just wanted to start from a fresh account. Just wanted to start from a fresh account on this DXY. This DXY, let's put it here. Let's put it here. You can see this horizontal level here. This horizontal level, you can see how price bounced off from this place. This is the weekly time frame. As you can see, this is the weekly time frame. Price bounced off from this level. You can see here, price rejected the level, price rejected. So these are areas of value. These are areas of interest. These are areas of interest. You can see here. I did anticipated this. I anticipated this sell. I'm going to show you how I got that as well. Let me go down to the daily. Let me go down to the daily time frame. So on this market, I actually saw something like this, You can see here, this was, it's currently a level of support. So you can see here how I anticipate. This setup is on my Instagram page. I did, and I anticipated it, and it worked out. It doesn't always work out, never always work out. So you can see here, this was actually you can see this was an ascending triangle pattern. So price broke below it, retested, and anticipated all this sell all the way to the lows right here, and it happened. But it doesn't always happen like that. So when it doesn't happen, that's when you have to use proper risk management so that you don't blow your account during that period. During that period when your setups don't work out, and learn to leave the market when it has messed you up too much, like I did. The market had messed me up too much, so I had to run and leave the market alone and leave it to just play out. I do go in and do some analysis and just anticipate, okay, technically, if I'm trading, I will expect the price to sell at this level or buy at this level, but I won't take it on my live account. I could take it on my demo account. I can take it on a demo account, but my live money, I will not take it there. So this was my analysis. This is currently my analysis, not was. This is my current analysis on the USD, the DXY. You can see here, this is an area of interest. You can see this is an expansionary channel, expanding channel. You can see here currently, this is the daily expanding channel. You know about expanding channel, right? It's expanding channel whereby the price starts making higher highs and lower higher lows, higher highs and higher lows. You can see here, so price will just be expanding in an expanding type of nature. An expanding type of nature. So you can see here, this was a resistance. This is my area where I'm high currently. I'm currently just looking at these areas for possible sells of this the DXY. If we go down to the 4-hour time frame, anytime you draw patterns, there's something that's called pattern inside pattern. I actually learned that from FX Goat. FX Goats they are South African traders. Like I told you, I follow a lot of people. I follow a lot of people. I learn a lot from everybody, combine everything and just make my strategy. So there are pattern inside pattern. On this DXY, you could see that I saw a lot of patterns inside patterns on this chart. That was how I was able to anticipate what price is likely to do now. So you can see here, let me draw out. You can see here. You can see this pattern. See this? There was a pattern here. There was a pattern here. You can see this ascending type of nature pattern. You can see this, it was ascending, broke below it, came back down. Broke below it, came back down, and you can see something else like this again. You see how price broke below it, retested, came back down. So since price was actually acting this way within this pattern, and normally in order to predict the future, you need to understand what price had already done in the past to be able to anticipate what price may likely do in the future. So I was like, okay, if price was making an ascending channel type of nature within this expanding channel, I was like, okay, so since price has been doing that, what may likely happen currently is that price will continue to do the same thing here. You can see this. I anticipated price to do the same thing here. And I had my overall, I think I should start this right now, okay. Okay. So technically, this is my analysis on the DXY. This is my analysis, what I'm actually expecting. Note that even if we do analyze, no matter how good we think our analysis may be, market can do the exact opposite longer than we can afford it. That is why when you are trading, you need to be active, you need to expect anything else. You need to expect the opposite. The opposite can happen at any time, at any given time. This was actually my analysis. So this one I'm expecting on gold, on the DXY, the dollar index. I'm expecting price to come all the way to the top there. This is what I do. So I'm expecting price to complete this channel inside the channel. As soon as price hits the third touch, this will be the major third touch, like I've been telling you, the third touch. So you can see the first touch here. This was the first major touch. The second, I'm anticipating for the third touch at this area. At this area. But the third one, once it happens, I'll be looking to short this market. It can be traded as well. It can be traded. DXY can be traded as well. It's not just for like anticipating the strength of dollar alone. It can be traded as well on your normal brokers. It can be traded. It has a different kind of names on your broker. So what I'm anticipating is for price to actually continue this pattern. Okay. First, price will continue this pattern, probably something like this, then for a possible touch for price to continue all the way down to break. Because this pattern, the overall pattern, the expanding channel here, you can see is a reversal pattern as well. Because it is ascending, it is in an ascending nature. You can see it, price has been making higher lows. You see higher low, a low, so the higher low, was a higher low that is higher than the previous high. You can see this, our price is making higher highs here. So technically, whenever we see this kind of patterns, we expect that price may likely reverse. The opposite can happen. The exact opposite can happen. Price can invalidate this entire chart pattern, but it is very difficult because this is a pattern on the higher time frame. It's not just like the 2 minutes, the 15 minutes, the 1 hour pattern. This is a daily chart pattern. So it is very difficult that price may invalidate it, but you have to be ready for anything. Price can actually break above it, retest the pattern as well as the horizontal level and continue with the buys. This is what may likely happen. This can happen as well. However it happens, we have to be ready for a trade. Yeah, we are going to be ready for buys or we are going to be ready for sales. So we just follow the market. Whatever the market does is what we do. We follow the market. We don't like impose our bias on the market. You can never do that. If you impose your bias on the market, that means you are ready to lose millions and millions of dollars. I'm pretty sure for beginners, they don't have that kind of funds to lose. So you won't take the risk. That's why you always trade with the trend. As a beginner, it is best to trade with the trend, even reversal trades. Taking reversal trades as a beginner is very not cool because most times price may decide to stop you up 1,000 times before like going in your initial direction. But if you're taking trades with the trend, you know the overall trend is already a downtrend, so you're only looking for sells. When it is an uptrend, you're only looking for buys. But as a pattern trader, at least you should know when to take your trades and when not to. And here now, probably, let's say if price gets up all the way to this top here, this is what I'll be expecting to do. Why will I be taking my profit here? Because it is the safest place to take my profit. Because it will be the safest place to take my profit. Price can decide to break below it and continue if it plays out. Price can break below it, then continue all the way to the lows and all that. But you start banging your head on the one and be like, oh, I missed a lot of pips. It's better to hit your take profit target than for price to come near your profit target and then reverse and stop you out. No need being greedy in this market. So if I can get something like this, if I can get price to come all the way to the top here, then give me my candlestick confirmation. I just don't trade because it is at the third touch. And I'll say, okay, if a price is already at the third point, then it's going to sell off. You can do that, it's normal, but you can't be trading like that on your major account. If you try that, you blow your account. You can just put little money on one particular account and be like taking high risk trade, whereby you sell at resistance. You sell at resistance, then you buy at support. Because this will be a resistance. You can just say price gets here, you just sell without proper confirmation. As you can see here, people who got in on these, they were very lucky because there was candlestick confirmation here. You can see how the candlestick confirmation, you can see this. You can see this rejection, this pin bar. Yeah. You can see this nice H4 pin bar. This was a very cool trade. This was a doji. This was a doji signifying indecision in the market. You have already read your candlestick Bible, right?
Yes, yes.
Okay, so you know the psychology and the story behind all this candlestick, of course. You can see how price rejected from
Yeah.
here, which means there's a lot of there's some kind of selling pressure there. So only that alone, with your other confluence, this is a good confirmation to go short. Probably if you are taking a sell around that area, then when you are putting your stop loss will be put at a point whereby if market gets there, it will invalidate your setup. If price gets up to that place, which means your initial bias has been invalidated. That is what has been messing me up recently, because I was just like looking for super sniper entries like 10 pips, 20 pips stop loss to get like 300 pips and all that. They later play out, but most times they get to 30 pips and my stop loss is at 20 pips. They get to 30 pips before like going down all the way 200 pips to my target or 300 pips. But those sniper entries is something I'm actually working on, and I'll get it right. I'll get that right. But for now, I'm just going to be putting my stop loss at an area that actually invalidates my setup. So for people who got in on this, they would have taken their trades and targeted put their targets here, and that is pretty easy. This market is actually easy. It's actually easy to predict. It's just the psychology part of things that is difficult. The psychology part of things. Most beginners can analyze this chart even better than I do. They can I'm also a beginner. I'm not trying to say you get. I'm also a beginner. I'm learning every single day. A lot of people can analyze this chart exactly as it is, but executing the trades, most times when we get in on some trades, the trade starts messing around and we decide to close it. Few minutes to few hours later, the trade spikes up in huge ass profits. I will be like, oh damn, I wish I had known, I would have left this trade. All those things are actually the psychology part of things. You get it happened to me a lot, even recently. I'm telling you, recently I analyzed like the V10 1X on the synthetic indices. I analyzed the V10, I went for a sell. I placed my stop loss, my target level, and everything. I was just staring at the chart. That is why it is good, since it is good for a person who has not mastered their psychology yet. Once you analyze a trade, have a good reason, put your journal your trade. Normally, I use Google Sheets to do my journaling, where I put the entry image, the reason I enter, the pay, the amount I'm risking. You get those normal journals. I just put everything there. After doing that, just close your chart. Just go away. Go away for a long time. Then come back. If price hits your stop loss, then it is what it is. If it goes in your profit target, then it is what it is. By doing so, you avoid closing out trades that will actually have played out in the future. That would have played out nicely. Because for me, I've lost like hundreds and hundreds and hundreds of dollars doing so. Normally, I would just take a sell, I'll analyze in particular, pay, anticipate an area where I will be expecting to take a trade, and then I just start fluctuating, messing me out, and then I just like close the trade, and I feel this will not work out anymore. But these are tricks that the market use in like threatening beginners. Because for professionals, they've seen those things like 1,000 times, so they know it is what the market knows how to do. Just like mess with your emotions and everything, then before like taking off to your initial direction. So for now, my bias on the DXY is long. The DXY is continuing to is strengthening for now. The DXY is strengthening for now. That is why I'm anticipating for a possible continuation sell on the gold. I'm anticipating for possible continuation sells on gold. Anticipating. You can hear me clearly, right?
Yes, sir. Yes, sir.
Yeah, okay, because my network is kind of waving right now. So I'm anticipating for a possible continuation sell on gold, because the dollar index, the DXY, is actually strengthening. Most times, not every time. Most times the DXY can be on a buy and you have the gold on the buy. The gold will be going hardcore buy as well. So these are what you have to understand. It doesn't mean because the DXY is buying means gold must sell. No. There are various reasons. Why this market moves. So you need to have a strong reason why you are taking the trade. You need to record your thought process. This forex trading of the thing is a business. If you treat it like a business, to pay you. If you don't treat it like a business, to mess you up. To actually blow your account and everything. Those professional traders you see, they also lose money. Most of them, they blow their account as well. But they've already made a lot of money from it. This forex of the thing is the beginning that is difficult. It is the beginning that is difficult.
Yes.
Okay, so once you get to a particular point in your journey, everything will just start making sense. Like me, there was a week like that. I had 5 straight wins and just 2 losses or 1 loss. No, I mean 7 wins and 2 losses. 7 straight wins and 2 losses. Imagine if I had been in the market for a long time, or if I was trading like a huge ass capital, and I have like 7 wins. Probably I have like a 1% loss, and on those 7 wins, I made like, let's say I made like 10%. Then on the losing trade, I lost like 2%. That would be like 8% in just a week. 8% in just a week. Imagine 8% on the $10,000 account. That's like $800. Imagine making $800 in a week. You won't have stress. But most times, if you're using small account, you'll be like making 10 pips, 20 pips doesn't make sense to you. Like if you're making like 100 pips, you'll be like, oh, just $10 with your micro lot. If you're making 100 pips on a micro lot, that would be like $10. On your mini lot, that would be like $100. On your standard lot, that would be like 1K. So it is these are the levels that we as beginners we need to understand. Most of us are making more pips than those professionals. In a week, most of those professionals that are making thousands of dollars are making only like 50, 60, 70 pips. But we beginners, most times we are making like 500 pips in a week. 500 pips in a week, that would be like $50 if you're using the smallest lot size, $50. That would be like $50 in a week. Most times, depending on the pair, most times it's not even up to $50, it'll be like $40-something. But if professionals, the big money guys are trading that with a standard lot, imagine that's 5K dollars. Imagine they are using 10 standard lots. That's times 10. That'll be like $50,000 in a week. So for me, I have learned to not feel intimidated by other people's results.
Yes.
I've learned that because it actually messed me up in the beginning. It is even messing me up. I'm actually working on like having a hardcore like psychology regarding that part. That is why most times when I'm following some Instagram traders and some real traders, if they only share their profits, they don't ever give me any kind of lessons. I unfollow them. I just unfollow them. Because why? By doing so, it will save me a lot of emotional trauma. I'll be like, oh, this man is making a lot of pips, a lot of money. I mean, a lot of money, and I'm making nothing. Are we not trading in the same market?
Yeah.
But you fail to understand that man you're saying is using a huge ass lot size. Most of them use 100 standard lot size, and they make like $5K dollars, $10,000. So this is a long-term game. That is what I have learned. Actually, I've come to understand that this is actually a long-term game, because for me, I'm good at flipping accounts. I'm good at flipping accounts. The only thing I had was like, oh man, this money is not even enough for me to live life. I'll be like, oh, even if I flipped this account from like so amount, even the profit is not even enough. I get greedy and all that. And I'll be like, okay, if I can flip the account from this amount to this amount, which means we can flip the current balance to like $1,000 or $500 or $200. That is when I blow the account. I've done that like twice. I flipped. Recently, I think for the past 2 months or so, I flipped. The first one I did was $6 account on synthetic indices. I flipped a $6 account to over $100 with just few trades.
Wow.
I flipped it from $6 to over $100. But I became so greedy. I was like, oh, imagine what I could do by taking this $100 to $1,000. I even posted it on the group. I think probably by then you weren't in the group yet. I posted it flipping the $6 to $100.
Yeah.
I was like, oh, I can't wait to get this $100 to $1,000. Imagine, I blew the account straight up because I became greedy. I was like, oh, I need to flip this.
Yeah.
I forgot to continue doing what I was doing. I was working. That's why now, as you can see me in my current office, I have my rules. I have my current rules because after every trading week, I try to reflect on my trades, what I did wrong and what I didn't do that I could have done. And I write everything down to enable me better my psychology. Because currently, I won't lie, technical skills is nothing for me. I won't lie, technical skills is not. I can analyze the charts and tell you and predict the possible outcome of the market. I can predict the possible outcome of the market. And more than over 50% of the trades will go exactly as I predicted it. But the psychology part is actually the real deal. That is the main thing, not the technical aspect and all that, fundamental aspect. Those are just normal things that with time you will understand. But for me, currently, are these psychological aspects, because this trade I actually anticipated it and I wanted to take it, but I was like, oh, I've lost too much and all this. I don't want to take it. If I had taken this trade, I would have made over $100 to $200. That's a lot of money in Nigeria. $100 currently, since I was using a perfect money to withdraw, $100 is over like 50K plus. That's nice money to be made in like few days. Making 50,000 plus in a few days, that's a lot of money. Even most that's higher than most accountants get. So in this market, we don't have to actually be greedy. Being greedy is what kills beginners. You want to like flip $1,000 account to like $1 million in like no time, and that is actually the problem. That is the problem. That is the psychological aspect of things. Like there was this guy, he has an academy, is Falcon YouTube channel, Falcon community. He said this technical skills of the team is nothing, because the guy, he actually failed for 4 years before he became consistently profitable. 4 good years. Imagine blowing accounts continuously for 4 years. Most traders will like give up, like, oh, this is not actually working. I can't take this anymore. Imagine blowing $100 account, $200 account consistently for good, big, fat 4 years. Not everybody can take it. Even me, I'm not into this game for up to 2 years. Probably this is September, next month to November, I'll be 2 years in this game. 2 straight years in this game. Although I've been on and off, not just consistently doing it, on and off. I've seen the progress. Imagine somebody going hardcore 4 years, blowing accounts continuously. That is actually hard. So the psychology part of things is the problem. Psychology part of things is the problem in the forex market. That is why a lot of beginners blow their account. That's the difference between being a consistent profitable trader and a losing trader. If you call a losing trader and a professional trader, give them a particular chart. Let's say they give them gold, let them do their own analysis based on their strategy without taking the trades. You may likely see that they will end up with the same buyers, but different entry points because of their different strategies. But they will end up making money from that particular trade. But the psychology part of things is actually what messes people up. And if we do not give up, in the long run, we'll actually get it. For me, I'm making a lot of improvement. That is why always I try to drop analysis on the chart, on the community, because by doing so, I'm actually like getting a feel of what I've learned, like putting it to work. And here, just analyzing charts, posting. Most times, I even contact the mentor and I'll be like, okay, this is what I think on this particular chart. This is what I feel. What do you think? You think my analysis is on point? You think I'm getting it right? I'll be like, okay, you're down. It makes sense. You're doing the right thing. Like recently, I flipped a $20 account up to over $100 account. I actually showed it to Daniel, our mentor on the group. I showed it to him. He was like, "Oh, that's good. Continue to do what you're currently doing." But I was dumb. I won't lie. I was dumb, stupid, because I was like, "Oh man, I've been grinding for too long." Because for me, I feel these 2 years of a team is too long to be like. At least I'm supposed to be making thousands of dollars by now. This is what I think. I used to think back then, I'd be like, I'm going hard for 2 years now, at least. A lot of people get in this game and 2, 3, 5, 4, 5 months, they're already making a lot of money. They're already making a lot of money. And I'm here in this game for like almost 2 years now, and I'm making like $10, $30, $40, $50 in a week. I was actually greedy I was wanting to make more. And I ended up almost blowing that particular account. I would lie, I ended up almost blowing that particular account. I had to take all my I withdrew all the money, both my capital and the little profit that was left. I withdrew everything, and I was like, okay, I have to chill, because if we continue to like be stupid and be greedy in the market, that will prolong our time in making money in this market. You'll just be prolonging yourself for no reason. You'll just be making things difficult for you. The market is here, it's not going anywhere. That's what I have come to understand recently. The market is here continuously. It is not going anywhere. Even if I don't see a setup now, currently, even if I don't see a setup like 2, 3 days, I don't care. I do not care. If I don't see something that aligns with what I'm doing, I don't care. I may see other people posting huge ass profits. Oh, I'm making $10,000, $20,000. I'll just chill. I will just chill. I won't just mind what they are posting. Like recently, I took a set on V51 RS in the synthetic indices. My target was around over $100, But I sat with my computer and I was staring at the screen, just looking at how price was fluctuating. It messed with my emotion. And I told you, I closed this trade in like, I think $10, $11 in profit or so. The next day, imagine the next day I went to that market, because I anticipated that price was actually going to even continue more than my take profit. I was planning on removing my take profit when price gets 50% up to my initial target. I was planning on removing the TP and trail the market as it goes. In the next 2 days, I went back to the market and I saw that my first initial target had already been smashed, and even price gave more profit like I anticipated, but I lost. But I ended up closing like a lot lesser than I would have made. A lot lesser than I would have made. So these things actually they mess us up. They mess us up. I won't tell you that I'm a super guru and I make a lot of money and all that, bro. I'm just struggling with the psychology of a thing. Although I'm able to analyze the charts and take nice trades, but trust me, that psychology part, I'm actually working on it and I'm getting better at it. I'm getting better at it, but I won't lie and tell you, oh, I'm a bro. I'm like a pro now. I can like analyze, take trades, and don't even give a damn what happens. In order to have that hardcore psychology, you need to be a multi-millionaire who doesn't give a damn about like $10,000, $100,000. Not like people like us who entered into forex in order to make more money. In order to actually make money, not more money. People who enter to make more money, they already have money. If they blow like $400 account, $300 account, they don't give a damn. As I am, if I blow $100 account, bro, I'll sleep for a week. I'll sleep for a week with a lot of pains in my chest, blowing $100 account as I am right now. In fact, I won't even dare to blow a $100 account. And my current state, financial state, I won't dare to do that. So these are the things that actually affect us as beginners. We have to let go. As a beginner, we have to let go of this money of a thing. Once you deposit your money to the broker, it is no longer your money. Just consider the money that is no longer your money. Whatever happens, you're willing to take it. Whatever happens, you're willing to take it. Whatever happens, you're willing to take it. Like let me just show you an Aud Jpy trade. I anticipated Aud Jpy. I anticipated this analysis, but I was looking for sniper entries. Why? Because I saw other people giving super nice sniper entries, and I was like, oh, I think I need to get sniper entry. If I'm not getting a sniper entry, then that means I'm missing out. That means I'm missing out. But I forgot that I have a different trading system than they do. Just because they're having super sniper entries, And the funniest part of the thing, I like the guy is really transparent. The funniest part, he was actually having sniper entries. I was jealous of him. I was like, oh, I'm not having sniper entries and I'm slacking. Imagine it's in less than a month, I think beginning of this month, he actually posted a YouTube video on how he lost $60,000 real money the previous month. And during that month, I was jealous of him. I was like, oh man, this guy is making a lot of money. Not knowing inside him was actually getting messed up. He was losing a lot of money. But I was just so focused on what he was posting. I didn't like, I was like thinking, oh, he's immortal. He's doing better than I am. If I'm not doing like him, that means I'm not doing well at all. That means I'm not doing well at all. So those are the things that actually affect comparing ourselves with other traders. Those are the craziest things. But it turned out the guy had actually lost $60,000 that particular month. And I was like, whoa, he lost $60,000. And I'm losing like $100, $50, and I'm hitting my head on the wall. Somebody else that I'm trying to compare myself with is losing $60,000. That also made me to like chill. That made me to keep my cool. I was like, okay, I think I need to actually stop this. That was actually one of the reasons I stopped trading. I won't lie. That was actually one of the reasons I stopped trading for this week, and probably next week. I don't know. I may be trading next week, but not that much. Not that much. So this was a trade. This was a trade I anticipated. This trade, as you can see here. Price was actually respecting this trend line. You can see anytime price comes up to this trend line, it's actually reverses. It reverses.
Yes.
You can see here, price reverses at this trend line. So I have a lot of strategies, but I know when I try to understand when to use the particular strategy, when not to apply that strategy. Because most times market won't be breaking those nice bearish flags, nice bullish flags, continuation pattern, reversal pattern. Price will not be doing that always. That is why you have to create another kind of system that will enable you to get in trades when your some of your strategies are lagging, because strategies do not work all the time. That is what I learned the hard way. After blowing all my profits I made, I was like, okay, I think probably this week my strategy is not actually working. I need to sit back and relax until market starts giving me something that looks good. So you can see here on this price, you can see how price formed here, second touch here, third touch here, and you can see this was the fourth touch. This was the fourth touch. All this, I posted all this on the channel, on the group, and probably a lot of people took advantage of it, but lots of people took advantage of it. Fortunately, I got stopped out. Probably they also got stopped out unless they used a higher TP target stop loss. Technically, as a swing trader, I was supposed to take my trade something like this. I should put my stop loss above the high, because technically, the price decides to break above this high, which it should invalidate my current bias. If price could have broken above these highs, that invalidates my bias. But I did not do that. I was looking for a sniper entry because somebody else was actually getting sniper entries. Not knowing deep down that person was actually getting messed up by the market. Was losing thousands, while I was actually losing tens of dollars. And I was like feeling that I was being left out, not knowing I was actually fooling around, fooling myself. But this was what I did. So, but currently I don't actually trade the Asian session, because this was what happened. This happened during the Asian session. I got stopped out of this trade, and I was like, okay, I think probably I need to stop trading the Asian session, because in this forex market, this is a business. You have to treat it like a business. Gradually, as you're going, you need to learn what pairs works better for you, what market works better for you, what session works better for you. For me, the Asian session for a long time has been my enemy. It has been stopping me out. Then during the London session, price goes into deep profit all the time, almost all the time. In fact, 90% of trades I take during the Asian session end up stopping me out. before reversing, or ends up stopping me out and continues in loss if I had left that the trades open. So I had to like scrap that out. Had to like scrap it out. So you can see here, this was also an horizontal level. This was also an horizontal level. I had a lot of confluences on this trade. That was why I had like confidence, because I risked more than 1% on this market. I like took a lot of risk on this market because I was confident because of the confluences that I had. You can see here that price made a double top. Price made a double top. You can see here, this was the top, this was the double top. And it happened at the trend line level. That's two confluences. Touch of the trend line, one, double top, two confluences, and an horizontal level. This level you can see here. Let's go to the bigger time frame so you can see. We'll go to the bigger time frame so you can see this was actually a level. This was an area. Let me just put two lines because I don't like using this horizontal lines. I prefer to use that rectangle stuff. So you can see here, so this was actually an area of interest. You can see how price became support here, broke below, retested that resistance. If you continuously scroll to the previous data, you can see how price has been respecting this. If you continue to the back, you'll see continuously how price has been respecting this level. So I was super, super hyped up, confident that this market is actually going to work out. I had the confidence. I was like super confident that it was going to work out. Because based on the confluences I have seen most times when you see a lot of confluences, there are some confluences that are very obvious. These confluences were super obvious. Double top, a retest of the trend line, a horizontal level, and this was a break of the neckline. This was a neckline here. Price broke below it. This is the this is more like an M. You can call it an M formation. You can call it an M formation. You can see here, boom, boom. You can call it an M formation, but those are big grammar. I prefer to just say double top. That is what it is called. Those M and all that. Those are big grammar. So price did a retest. And whenever we are trading this M pattern or this double top pattern, if you can get it on the second leg, you see this is the first leg, this is the second leg. If you can get it on the second leg, super. That would be nice. But if you cannot get it on, if you're a conservative trader, not an aggressive trader, you wait on a break and a retest. That was what I waited for. You can see here, price broke below it, retested with massive rejection. You can see this. Then back then, these current price actions were actually not here. So all these price to the right were not here yet. So this was the confirmation. You can see how price retested the level and rejected. You can see this rejection week here. You can see that bearish pin bar. It had a lot of rejection weeks. And you can see how price was struggling. And I was like, okay, since price is struggling to break that level, which means there are a lot of sellers in this market more than there are buyers currently. So I was actually confident to take a sell because I had like 1, 2, 3, 4 confluences. 4 confluences and 5, in fact, 5 confluences. You can see my moving average. This moving average, I don't use it. It doesn't give me signal. I use it for confirmation. You can see how price broke above it. Whenever price is above it, you see it turns green. Whenever price is below it, it turns red. You can see here the moving average crossed at this area. Moving average crossed at this area. This was a retest of the horizontal level as well as the moving average. Whenever price retests an horizontal level as well as the moving average, that is a nice confluence. As you can see here, you can see how price was retesting this trend line. Price continuously went down. You can see how price broke above it and then continued buying. So I just use this as a confluence. So I took a sell here. I did take a sell here. With my stop loss was at 20 pips, 20 pips. I took a sell at this area. Took a sell at this area. Took a sell somewhere here. Price actually pinned me out. Pinned me just little. Pinned me out before going into my initial direction. This was a nice swing. This was a nice swing trade. I intended on swinging this trade up until these lows here, because I was actually at that time I was looking at these lows. At that time, my initial target was at these lows. This was my initial target. This was around like a 1 to 15, 1 to 16 risk to reward ratio. I was like, whoa, this is super big. Risking like 20 pips to get like 300 pips plus. I was like so happy. But unfortunately, the trade didn't go well because I was not trading as me. I was trading as someone else. I was actually trading as someone else, not as me. So the trade messed me up, and that was how it went into nice, huge profits. At least probably I would have gotten stopped out at this area. You know, normally when market gives me good profits, I start trailing my stops. I start trailing my stops. Probably I would have gotten stopped out at this level. I would have gotten stopped out at this level or at this level if I had taken the trade as me. Because technically, these are stop loss of the team should be based on technical levels. But I was like, this stop loss is too big. I can't do that. I can't take this big stop loss. There's somebody else that is getting sniper entries of 3 pips, 4 pips, 10 pips stop loss. That means I can do the same. But even if I had like gone for my normal target, my normal swing trading pattern, I would have still gotten like a 1 to 2 risk to reward, which is nice. Unfortunately, I was trying to be Mr. Somebody else and I got messed up. That was the week everything went like AWire. Like after this trade, every single trade I took, everything else stopped me out and spiked into my initial target. Stopped over 5-6 trade I took, stopped me out, then went into my initial target. Stopped me out. If I had won all trades, I would have had like 95 to 100% win rate for that week. But unfortunately, I was so greedy. I was trying to become Mr. Sniper Entry, but I got stopped out on every single trade I took. Every single trade. I won't lie, every single trade I took. Every single trade I took. So that's how I do my analysis. I look for chart patterns. Go on the weekly time frame. Try to understand what price is actually doing. Look for any patterns at all. I prefer patterns because they work a lot more. They are just very simple to understand. When you're trading patterns, I like them more. I only trade break and retest in the trading market. When I'm seeing like a downtrend, then I'll just be waiting for a breakout of a support level. Probably if it's a downtrend, I'll be waiting for something like this. I'm waiting for something like this. Let's say this is an uptrend. This bigger. This bigger. Okay. If I'm seeing something like this, boom, boom. This is how I trade when I'm seeing a clear uptrend. I'll just be taking trades at the retest. You can see here.
Yeah.
You can see whenever price break below a level, it comes back to that level and retest as resistance. And see how price. This is how price most times does when the market is trending. When the market is really, really trending. But most times it is not like that. Most times you won't get this like clean breaks and retest. That's why I have other strategies like the chart, like the chart patterns and other stuff like the divergence and all that. So most times market doesn't trend well. So you have to be using other strategies to take trades. So my next weekly analysis will be on Sunday. But I won't be using this current trading view account. I'm planning on getting premium so that I can be doing back testing as well. Can be back testing probably during my back testing sessions. You can hop in so we can like do back testing as well, like using the replay mode on trading view. I'm using the replay mode on trading view and like doing testing the strategies and all that and see how they actually work. So do you probably have questions or other charts you'd like for us to look at?
Let's look at that this thing you analyze.
Synthetic indices.
No, yes, that one is one with the US 30.
Okay, US 30.
Yeah,
let me see how this US 30 is even going. US 30. Wow, 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 wow. Sold massively.
Yeah,
Price
it
has
did.
sold massively. This would have been a nice trade for people who actually trade these US states.
Yeah.
Nice trade. Nice trade. So overall, these markets tends to be trending, like being an uptrend. It is during like some crisis, like the COVID-19 crisis of 15. This is that was why you saw this crash here, this drop.
Okay.
Was during the COVID-19 of 18. This drop here was during the COVID-19. If I had if I had the little knowledge that I have now back then, I would have gotten in on longs around this area. But back then, I was like, I didn't have the mindset that this is how market crashes whenever there is fear. Whenever there is fear of when there's a global crisis. I didn't know this was how market crashes. So I didn't even bother taking any trade. I would have gone in longs and been on the swing side of things by now, but well, it is what it is. Let's look at the recent price. Let's look at the recent price.
Oh, well.
So at this level, I saw the price was actually struggling at this area. So I had to put, this was some kind of like a resistance level. Some kind of a resistance level. If you come down here as well, you see this is a support. This is a support level. This is a support level. You can see here, price touched it in the past. Price touched it in the past. Price has been like touching it in the past. Why most people don't trade this currency pair is that this market is that it has little data to the left. Like currency pairs, if you like go on the currency pairs after marking your levels, you see the price goes down, comes back into that particular area you've marked up again and goes down. But on this one, if you mark a particular area, if you look to the left, you won't see any data to like check if your level is actually strong and all that. But for me, I don't care about that because I trade patterns. I focus mainly on the current price action. I focus mainly on what price is actually doing currently. So this was how I found this setup.
Yeah.
I found this setup. I actually anticipated a lot of moves in this market, but I didn't post all of them. Neither did I even bother taking them. See this. So this was like a reversal pattern. I anticipated all these moves. These moves you see here. I anticipate them, but I didn't get involved. So that is that. So currently, I saw that price was actually in a channel, in a descending channel type of nature. Price was actually in a channel. Those were like the first touch, the second touch, the second touch. I went down to the 1 hour. Went down to the 1 hour. You can see that price made a double bottom there. I noticed that there was some kind of a pattern in this area. It was actually an ascending. This was an ascending channel. Some kind of ascending channel. So this was how I had my previous lines. Some kind of ascending channel. Some kind of ascending channel. So I had a feeling technically the price was going to sell off from here because whenever I see this US 30, this US 30 of 18, it is crazy most times. It is super crazy most times. That is why I don't focus much on it. I just go in like once in a while. It doesn't actually retest most levels that you expect it to retest. Like my initial analysis was like, I was expecting for price to like retest this little level here. I'm coming, let me zoom in. My initial stuff, like I posted on the group, was I was expecting price to come down here, break below the trend line, retest here for a possible continuation for a sell. Unfortunately, price actually even broke above it, then retested the trend line even more. retested the trend line even more. So probably if I had taken this trade, unless I had like the swing trading mindset, if I was looking for sniper entries, I probably would have placed my stop loss around this area. I probably would have gotten stopped out on this trade. I won't lie. I would have been looking for like probably place my stop loss at the previous high there. I would have gotten stopped out before market goes in my direction. So this is how I normally trade. Why? And that's why I had to stop trading, because you see, if I had taken this trade, it would have been the same thing. Market would have just stopped me out a little, then boom, into profit. And that messes up a person's head. Can make you go crazy, because market still went into your direction. It's just only stopped you out. You have to understand that these big hedge funds and all that, they know where you put your stop losses. They know about these stop loss levels and everything. So once you want to become a consistently profitable trader, you have to put your stop loss at areas that invalidates the entire setup. So technically, for the big guys who are swinging, if they wanted to take the trade, they will put their stop loss around above these highs here. They'll put their stop loss above this high, which is the normal level where you're supposed to put your stop loss. Then target probably all the way to the bottom here, all the way to the bottom. Because if price had actually gone above this level, it would have been that price had already broken this channel. It would have been that price had already broken this channel, retested, and for a possible continuation to the upside. But price did not, which was signaling a continuation sell. That's how price broke below this level, then continued. You can see even the bearish engulfing here. You can see how this bar, this H1 bar, engulfed the entire bars, the entire previous bars at this area, because price was not willing to go above that area. You can see here. That was how I got in. I got this analysis initially. It was just very simple, like placing my horizontal, my pattern, placing my pattern there and all that. I did anticipate a sell here as well. Unfortunately, on this one, I didn't post it. If I probably go to my previous, the trading view I'm using, you will see all these markups. Even on the trade I sent, even on the setup I set, you will see something like this. I did something like this.
Yep.
I did something like this. You will see something like this, and I did. It actually played out, but unfortunately, I was expecting a second touch. So when I went down to the 30 minutes, to H1, the 30 minutes, I saw that price had already actually retested. But this would have been a break and retest. Breakout, you can see how price broke below here, retested with nice indecision bar. You can see the doji there, the doji candlestick, then the bearish bar confirming that sellers had already taken over the market. So those would have also been a nice, but I was expecting for price to go back up, do a retest for a possible continuation. Sales, unfortunately, the second entry was not given, so I missed out on that one. I missed out on that one a lot. I missed out on that one, but it's just what it is. So that was actually my thought process while analyzing this US state. That was actually my thought process. I saw this, our price was like, this market actually likes moving. It respects channels. These US 30 and US 100. US 100 is NASDAQ. They respect channels a lot. They respect channels. So if you are a person who is able to spot these channels and you have a nice account size, you can just be focusing only on these channels, on how to trade these channels. You can see here. You can see the channels here. See, when price get to the top there, you buy. You sell. I mean, when price get here, you buy. But buying at the bottom in this kind of market is risky. So that's why you need to have a good account, because whenever price wants to break these kinds of pattern, it tends to break below it. So imagine if you had bought here. Imagine if you had bought here, price would have messed you up, went back up, and probably came back, you'll be like, okay, I think it's going to bounce again. It would have messed you up. So for me, during this kind of market, I prefer to sell. I prefer to sell at the top, then trail it. So most times, if you are lucky enough, the market wants to break below it, you'll be in a sell at the high here. The price will break below it. Like imagine being on a sell here. Imagine being in a sell here. Probably market went up again and you went there, probably you weren't trailing your stop loss yet. You would have been in huge profits. You see, you have been in huge profits. You have been in huge profits all the way to the bottom here. Probably you entered your all the way to the bottom. Probably your target would have been at the lows here. This was on the third touch. One, you can see the first touch, the second touch. This was the third touch. This was the third touch. You could have taken your trade, your sell there. So this market actually respects channels. You can see another channel here. You buy low, you sell high. Buy low, you sell high. Basically, this market of a team, you need to understand, know how to buy low and sell high. That is just the two things. You need to understand and know how to buy low and you sell high. If you buy low, make profit. If you sell high, make profits. Most people, they actually buy high and they sell low. That's why they don't make profit. Imagine entering on a sell here. Imagine entering on the sell here. But I've gotten stopped out.
Yeah.
Imagine entering on the sell here. This was the lows. But you need to understand how to be able to buy at these lows and not sell at the lows. And imagine if somebody had taken buys at the highs here. I've gotten stopped out. Imagine if somebody had gotten on a buy here, probably on a buy here or something. It's around these highs. You'd be like, okay, I want to get a buy set up already. Oh, you see a breakout and a retest, and you'd be like, you buy there, probably put your take profit here, and stop loss be around this area. But I've gotten stopped out because you bought at the highs. You bought at the highs instead of selling high and buying low. So that is just a basic thing to understand in this market. Get your psychology straight. Know when to buy and when to sell. In this market, it's not the technicals of the time. That's why I always say technicals are normal. You will get that with time. It is normal. No matter how long it takes, you understand how to put up this channel. This will understand how, okay, I need to buy at this top. I need to understand that if I see an engulfing bar or a pin bar, it will mean I need to sell, I need to buy. But the psychology aspect of a thing, most people, they actually get on sales here. Most people actually got in on this trade. Most people got in on this trade. Probably those who were opportuned to. They could have got in on this trade. Probably their stop loss above this area. They'll be like, okay, I think I'm putting my stop loss above that area. Then their initial target will be at the bottom. Initial target will be at the bottom here. But because they don't have their psychology right, because they don't learn to let go of trades, like I would have personally, I wouldn't have let go of this one. Probably would have lost it as well. They'll be like, oh, I think price is not playing out. Oh, price has just broken above, retested it. They'll be like, okay, price has broken above this level currently. It has now retested. Let's zoom in. Oh, price has broken above. Price has broken above. It has now retested it. Price is going to possibly continue buying. And you'll be like, oh. Most people, they close at this high. It happened to me on V10 in the IS indices. I entered on a similar trade like this. Immediately I closed, few seconds later, price spiked into a huge profit. Most people actually close. Most people would even close their trades at this area.
Yeah.
They would have closed their trade at the end of this 30 minutes candle before price actually flies all the way down. So those are the psychology aspect of things. Although for beginners, it is normal because taking losses upon losses upon losses as a beginner, that's actually your hard-earned money, not the profit you made from the market. Yeah. Losing like probably if you made like a $10,000 and you've withdrawn a lot of money and you lose like $100 from that $10,000, you won't feel it. You won't even feel anything. But imagine depositing your $10,000 hard-earned money and you lose $100 from it. Hallelujah. Something will happen to your psychology instantly. You start feeling sick or something. You feel so depressed because that was your hard-earned money. But if it is profit, but if it is the profit you made, you won't even feel anything. You won't feel anything at all. So that was actually my thought process while I was actually analyzing this US 30 of 18. That was my thought process. Most times, if I'm trading these pairs, I go down to the very, very small time frame, probably the 15 minutes or the 5 minutes to just do my intraday trading or my scalping because I don't swing this trade much. unless if you have big ass account. Swinging these currencies markets require a lot of funds, because if you even take this with a micro lot size, let's say if you take this with a micro lot size, little move, you're already in big profit. With just a little move, you're already in big profit. With a little move negative to your side, you're already in huge loss. You're already in huge loss. So if you're even trading, unless you are like already good at it, before you can even trade this market with like $50 or $100, unless you are good at it already, because just few moves negatively will blow your account. Even if you're using the smallest lot size, few moves to the opposite direction, your account is gone. But for most people, they know how to flip it because they've been in the game. They've already made a lot of money from the market, so they don't even care about what happens to those $10, $20, $30, or $1,000 anymore. Not for people like us. We lose it, $1,000. Buhari will hear it. Buhari will hear about the news. You lose $1,000 a beginner. Wahala. So that's actually it. And that was my thought process behind this, the analysis that I made on the US 30. That was my thought process behind this analysis on the US 30. So you have a question or probably other charts we should look at?
Then let's check out the volatility 10 was buy.
Volatility 10, let me see. The binary.com. So let me just show you some of the two trades that I actually took, and then I messed myself up. They didn't mess me up. I messed myself up. I messed myself up on the trades. So let's zoom out a little bit. Let's see 10 tick indices. That was the V10IX. Zoom out a little. Zoom out. This market is actually crazy ass market. Crazy ass market. So you can see here, this was a resistance level. This level here, this was a huge ass resistance level. This was a resistance level. This was the level I was actually eyeing. It was a resistance level. So, and this was a support. This was a support level.
Yeah.
My initial thought process before this price action was like, okay, I think this was a resistance level, and price is already in an uptrend. This was a counter trend trade as well. I was like, okay, I think price is going to actually come down from here, retest this previous support level, resistance level as support for continuation buys. So I went in the smaller time frame to look for sales, and I got a very superb, nice sell opportunity. I'm going to go down to the 1 hour straight. I don't think 4 hours. Okay, let's just go step by step. Let me go down to the 4 hour. Probably if I had my MT5 logged in on this market, you would have seen the trades at the exact price I took them. You can see here. You can see here. This is actually what happened. So exactly what happened. So it was at this second touch here. So price made a double top. This is a double top. You can call it an M formation or whatever, but it's a double top. You can see double top at the resistance level. So what price did here, price actually went all the way down after creating this inverted hammer or pin bar, whatever it's called, or kangaroo tail, however it is pronounced. It had nice rejection weights. So I was expecting that if price, since price is at this level again, and price is showing signs of not wanting to break past the level, I was expecting the price would actually sell up until this area here. Up until this area here. So I went down to the 1 hour time frame. I went down to the 1 hour time frame, and I actually got a nice sell opportunity. I had an horizontal level at this area. I had my horizontal level placed at this area because this area was my target. This area was my initial target. Initial target was at that area. So I saw that there was an indecision bar here. You can see after this big engulfing big ass green bar, the next candlestick was a bearish doji. It was an indecision bar. And the next candlestick was bearish. It was kind of bearish, which indicates that the market, the sellers are now in control, are now possibly in control of the market. Since this bar could close bearish, which means the market should likely sell from here, since this is already a resistance level, and I'm anticipating the possibility of a double top formation. I did take a sell. I think I went down to the 30 minutes. Went down to the 30 minutes or so. I took a sell. Come here, let it load up. Let it load up. Let it load up. Let it load up. I took a sell. Yes, I took a sell around this area. I took a sell around this area. You can see how dumb letting your emotion mess you up can actually make you lose a lot of money on trades. This was actually my trade setup. Why I had my stop loss placed at this level, I was like, okay, if price could come back to this level, break and close above it on the 1 hour, which means price would have already invalidated this resistance level. So technically at a resistance level, if it is not a fake out, normally price should not break above and close above it. Price will only go there, reject it, and continue down. I was like, okay, since I'm not expecting price to actually go above this area and close above it, let me just put my stop loss there. If price is trying to stop me out, that means it has invalidated my setup, and my target was around this area. Yeah. You can see here, my target was around this area here. And the funniest thing was, I actually entered at this candlestick here, this candlestick. Let me just highlight the candlestick more. I entered after these two, you can see these two indecision candlestick here. I actually entered at this big engulfing bar, this big bearish bar. That was actually my entry. I entered when it was forming. I entered when it was actually forming, and I actually closed my trade 5 minutes or 2 minutes to the candlestick, the ending of the candlestick, which means immediately I closed, price went down like big, huge. Price put me in profit, but I had already closed my trade. I was no longer in the trade because I was scared, and I was like, oh, I don't want this price to stop me out and all that. I don't want this price to go back up and stop me out. I closed out the trade. Few seconds later, price shot in profits, went back, made a correction, shot down again, made a correction, and went down. The next day I woke up, I saw that if I had left my trade, my trade I would actually have hit my take profits. I would have seen an increase in my account balance. But I closed out the trades stupidly, and I lost over, like, probably from here up until this place, I would have made over $30. I would have made over $30. That is a plus. That is a plus to my account. That would have been a nice plus to my account. I would have made over $30 at this my TP target had hit. I would have made $30. So there is this thing in Forex. The pair we are supposed to take trades and just chill on. What happens is that we most likely sometimes close out that particular trade that we have played out, and the one that don't actually play out at all is the one we have confidence in, and we leave to like, okay, I think this trade is going to work out. Let me just chill it. Since I closed the previous one and it messed me up, I'm not going to close this one. The one you don't actually close is the one that ends up messing you up. But the one you close is the one that ends up, that would have given you nice profits. That would have given you nice profit. That is something that happens in this Forex of the thing. That's the psychology part of things. It happens to me a lot. I took this trade, it would have been a nice win. I didn't close, and I closed out. I entered on another trade. I think I entered on step index long. I messed up on that one because I left the trade. I was like, okay, since I closed that one out, I don't want to make the same mistake on this one. And I was seeing that the price was actually printing something negative towards my negative regarding my trade. I was like, this thing is printing very bad, and I'm at the opposite end of the trade. Well, let me just let it be, let it play out. And it ended up actually stopping me out. I lost like $7 or so on that trade. But if I had closed that one, since everything was lining up for me to close, I would have saved my account from that negative loss. But on this one, that was giving me nice printing, that was printing nicely, that wasn't like, showing me some negative candlestick formation. I closed it out because I was scared of losing. You get? So it's not actually the technical part of things that matters. You can see the technical part of things on this one, it was superb. But the psychology part was what messed me up. I would have taken this trend and just like, let it be. Let it play out. If it plays out, it plays out. If it hits my stop loss, then it is what it is. It hits it. I'll just let that one go. But I did not. I messed up on this trade and I got stopped out. Something similar here as well. I actually took a long on here. So this was actually when I got so upset and I withdrew my money. After losing this, after losing this trade, after closing out this trade and losing like 2-3 trades in a row, I lost 2, 3, 4, 5 trades in a row after these wins. And if I had won this trade, those 3, 4, 5 trades in a row, I probably would have taken them, or I probably, even if I lost them, I would have gotten covered because the profit from these one would have covered the losses on those ones. But I left it and I just had to like put a little money in my account. I left only a little on that particular account. And I took longs here. I was long here. I took buys here. These buys was very easy for me to spot. It was very easy. I took longs around this area here. My stop loss was at this area somehow. So my target was at this level here. That was my initial target. Probably my trailing stop would have gotten stopped out. I would have gotten stopped out around this area because I would have trailed it. I don't make that mistake. Once I'm in nice profit, I trail my stops. I trail my stops. I would have gotten stopped out here. But what happened? This trade didn't work out because as at that time, I only had little money in my account. And I opened a lot of trades because I was like, oh, damn, I have missed a lot of money and now I want to make it back. I want to make back my money. I took this trade longs and I took V75 1X short. Unfortunately, that one didn't play out and that one ended up blowing the account before this one took off. Yes. That one ended up stopping me out before this one took off. I'll be right back. Just give me a few minutes. Please. Give me 15 seconds. I'll be right back.
Okay.
Are they busy? So yeah, so that was what happened actually. That was what happened here. This one would have been a nice win as well, probably like 20 something to $30 as well win. That was what I would have made, let's say $15, $20 plus win. Would have been a nice win, but I ended up losing this one. And let me also show you the V50IX setup that was supposed to take, and I ended up not taking. So most times this setup, I send it out to people and they make a lot of money, but why me? I don't make any money because they have even more confidence in my analysis than I do in my own analysis. So you can see here, these are what I saw on this V750 index. I would have made up to like $100, $200 from this market. This is what I saw. This was what I saw. I saw an impulse. This was an impulse. This was an impulsive move. Impulse move. And this was. And this was a correction. This was a correction. You can see here, this was a correction. This was a correction. This was how I even sent it to the group. I'm going to send you the pictures. I think I have the pictures on my phone while I was actually on the trade. Then I'm going to actually send it to you on WhatsApp. And this was another impulsive move again. This was another impulsive move. So you can see here, there's a correction here. Here there's a correction. You can see here, there's a correction. a correction here as well. This was a correction as well. So I was expecting that price would reverse from here all the way. I'm going to go down to the smaller time frame and show you what made me actually take this trade. So this was a bigger time frame. What was happening on the bigger time frame, because I knew the price is actually correcting for a possible continuation to the upside, because this is a correction. Because you can see after that impulsive move, after the correction phase, we had another impulsive move. So currently we're at a correction phase. After this correction phase, we're expecting another impulsive move to the upside. But I come in, let the H1 time frame. So you can see here, this was a nice trade. I was like super confident on the trade as well, superbly confident on the trade. And I did anticipate, you can see here, boom, let's say price was here at 10. You can see this, there was an expanding channel. There was an expanding channel, as you can see here. This was what I was seeing back then, because back then all these price had not formed. All these price to the left had not formed. And this was what I was saying. Since the V50 RX is super volatile pair, even if you take it with the smallest size, lot size, a single move is huge profits. Single move in your direction is huge profits. Single move to the negative side is actually a huge loss as well. But this was my thought process around this area. Yeah? So this is what I saw. This was what I saw, and that made me take the trade. This was an expanding channel. You can see the first touch, the first touch, second touch, third touch. So I knew that at this level, at the third touch level, price is expected to break below this overall expanding channel. The price will actually sell and then break below this channel. So you can see here it did, and it went back all the way, started messing up and all that. Probably I wouldn't have stayed that long. Probably I would have still held it. I don't know. So I went down, I zoomed in. You can see here, this is an impulsive move. This was what happened. This was what happened. This was what happened. And I think I was like here, somehow around there. And I took this trade at the 5 minutes, on the 5 minutes chart. I think I took the sell on the 5 minute chart. I didn't actually take it on the bigger time frame, because I knew this trade was, this particular market is super volatile. It moves like crazy. Moves crazily well. So this is what happened. I had my stop loss and everything on point. I had every single thing on point. I had them on point, everything on point. But unfortunately, it didn't work out. As expected, this is what happened. You can see here, this horizontal. So you can see here what price did here, and see what price did here. So this was a price broke below this triangle. This trend line. Price actually broke below the trend line. Price broke below the trend line. Went back up to retest the level. On the 5 minutes, you can see nice bearish bars at that level. I'm not going to go down to the 5 minutes. If I go down there, these lines may likely disappear. So on the 5 minutes, I saw a nice entry. I took my sell. Immediately, I took my sell. I took the sell around somewhere there. Placed my stop loss above that high. You can see, placed my stop loss above that high. Market was going like crazy. During this time, I was not actually on the chart. During this time, if I had been on the chart, probably I would have even closed it around here. Then you can see how price was moving. I closed my trade around here, somewhere here around here, for like $15 or $12 or so. Closed my trade around here. But initially, this was my initial target. This is why it is good to like trade with good account size and leave your trade running. These are just experience. These are just experience. So my target was at this was at this low here. The target was around these lows here, also something like that. The target was around these lows here. And I planned on actually swinging this trade up until the completion of the overall, the price was actually moving in the descending channel in a correction pattern. So I was anticipating that price would come all the way down here, to make a third touch, to make the third touch for a possible continuation buys to the upside. Because if you see that, let me zoom out a little bit. So let's see if I can get the third leg here, the first leg. Okay, price low. This was what was happening. Let's just forget about that. Price is not loaded because I'm on the smaller time frame. So I closed this trade in little loss. And if I had actually left my trade without shifting the stop loss, without like modifying my target and anything, probably like in 2 days later, I would have gotten into my account and I would have seen a plus of like over $100 in profit. But I ended up closing the trade, and man, it was really, really painful. It was very painful. I won't lie. It was really painful. I knew I had like the positive mindset regarding the trade because it had a lot of confluences. You see, price was like in an ascending channel, in a descending channel type of nature, and on the smaller time frame, you can see the expanding channel, and price was at the third touch. Price also broke below the trend, the counter trend. This was the counter trend. Price broke below it, retested. It was just like superb. It had a lot of confluence for me to actually hold on to the trade, but I was just staring at the charts too much. And I ended up closing these trades premature. And few hours to days later, would have been $100 plus TP target. Would have been $100 plus TP target. So these are basically, I hope you're like understanding how I actually trade from like these explanations. Because my kind of trading style is very simple. I don't do all those, not like most people that are trading, they'll be like, although it is very good, most times I do that as well. It'll be like, okay, this is a support, boom, we put another one here, boom, 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 boom. This is how most people trade. Put horizontal lines everywhere. They'll be like, okay, this support, turn resistance, this resistance, turn support. No, I don't do that. I was actually doing that at the beginning, but it was getting confusing because the lines were too much. I couldn't see what price was actually doing. Price action is king because you are focusing mainly and only on the price, on what price is actually doing. Because looking at this trend line, you'll be trading based off of the trend line. You'll be like, okay, I think this trend line is what I should focus on more. Instead of focusing on what price is actually doing, you'll be focused on the trend line because they are too much on your charts. You just believe them.
Yeah.
Start trading based off of them. But I don't do that. I used to do that. I don't do that anymore. Most times I do, then I just want to trade, break out and break and retest. Then I want to trade during trading markets. Most times I do that, but not as much, not with these many trend lines. I just like put the lines at an area that is close to the price. But putting like 10,000 lines on my chart, no, I don't do that. It's confusing. It's confusing. Although you may get the same result, but for me, that's not just my thing. And technically, you can even see how this flag contains bearish flag that Joel normally talk about. It happens on every market. You can see here. This was a bearish flag. You can see this was actually a nice bearish flag. A possible daily continuation, the price continue. You can see another bearish flag here. These things are easy to spot. These things are easy to spot. These things are very easy to spot. I also spotted these trading opportunities, but I was far, far too discouraged to take it. This was a normal breakout and retest. I had missed this initial breakout of the channel, and then I saw the price broke below this support, previously support level, retested at resistance with nice rejection, weeks, but I was too discouraged to take the trade based on what has happened in the past, because I had messed up in the past. I just didn't want to get more messed up trades, so I had to just let it be. If not, this would have been a nice trade as well. A nice trade, then you would have targeted the normal, probably taking a trade here, nice stop loss. With the target at the lows, the previous major lows over around here, would have been a 90-piece match. So this is just basically how I trade. This is how I look at the charts every day, come up on the charts, mark up the charts, and do everything. This is exactly how I trade. And technically, whenever our mentor sends signal to the group, what I actually do is I try to go to the charts and spot the reason as to why he took the trades based on his strategy and how he trades. There was this V50 index. You told the trade, right? The V volatility 50 index sell setup, sell signal he actually gave. You took the trade?
No.
Oh, you didn't take it. Okay. He actually gave a V50 index sell. It was a nice one. Although he messed around. I took it, but man, my account couldn't hold it because I had already lost a lot of money. I had to withdraw a lot from the account. I just like leave small money there. So I came to the chart and I was like, okay, how did he see the sell? And I was like, okay, I saw something that I know. This was like a channel. So the channel, you can put it like this. Channel is an expanding channel. This was an expanding channel. Then there was a channel inside as well. There was another channel inside as well. This was another channel. So this was what I was actually seeing. Then when he gave the trade signal, so that was why I took it. I took it with confidence because if I had seen this setup myself, I would have also taken a sell. I was like, okay, this also rhymes with what I trade. This also makes sense with what I trade. Even with his stop loss and everything, it made sense for me to even take the trade more. Because initially he had the entry was around here, and the stop loss was above the high there. The first TP was here, and the second TP was around somewhere here. I think they've already closed out the trade, but during this drawdown, I was taken out from the trade. During this drawdown, you can see the huge ass drawdown here. I was taken out of the trade. I was like, okay, my account couldn't hold it anymore, so they had to close it, the trade, and I was okay with it. That was actually the last trade I took. That's why for now, I'm just off the market, just trying to get my head straight. So you can see from everything I have been saying, the technicals are pretty like not that difficult to get. They're just basic things. It's the psychology part of the thing. That is the hardcore nigger that messes up everything as a hardcore nigger. So this was what I saw. From everything, you can see how I explain why I take a trade, how I took it, where I took it, and every single thing. You see, everything makes sense, everything rhymes up. But I end up losing the trades a lot. I end up losing the trades. I end up losing a lot of the trades because of the psychology part of things, which is why I left trading for like this whole week. This week as well, I'm not trading. Throughout last week, I didn't trade. This week as well, I'm not going to trade. I'm just focusing on my other courses, because I have other courses apart from forex trading. I have an affiliate course that I'm going through right now. I'm currently just going through the affiliate course. It's Espatnia. You know about Espatnia, right?
No, I've not heard about it.
Okay. Mentor, he was the one that actually introduced me to it. Espatnia affiliate, digital affiliate marketing. where you like advertise other people's digital products and you get commission for it. So that's what I'm just focused on for now. I just want to use that to build up momentum, like capital, to go in big, because this $100, $50 thing, and I'm done with all that. I'm done with all that. I don't want to be wasting my money anymore. I don't want to be wasting my money in the market. So funding those little capital is like you giving your money to the broker.
Yes.
Professionals can flip any amount. They can flip it because they don't give a damn about the money. But we probably that $100, $50 is a lot to us. So we will have our emotion wrapped around the money. So when even though we go like $5 in drawdown, boom, man, our brains are already smoking. But for people who have like $100,000, $500,000 in their account, they don't give a damn about $100 even if it blows. As long as they're trading right, they don't give a damn. So for me, I'm just chilling for now. I'm just focusing on the affiliate marketing of the thing and just trying to build up momentum from there and see what happens. See what happens next. Just see what happens next. I think we are done with the charts now, right? Or you have other charts or questions or something?
Let me first of all ask a question.
Okay.
I want to know.
Yeah.
Checking like when we start with the gold.
Yes.
And we analyze the charts from the weekly.
Yes.
Down to the daily.
Yes.
Then the 4 hour.
The 4 and 1 hour.
1 hour.
Yeah.
I want to know these chart patterns.
Yes.
What time frame can we see it clearly?
Actually, these chart patterns, they are on every time frame. But the lower you go into the time frame, probably a chart pattern you see on the daily is way stronger than the chart pattern you see on the H4. On the daily time frame, the chart pattern you see on the daily time frame tends to play out even more than the chart pattern you see on the H4. So also is the chart pattern you see on the H4, it tends to play out even more than the chart pattern you see on the H1. Then the chart pattern you see on the H1 tends to play out more than the chart pattern you see on the minute 30. But on every time frame, you can actually spot these chart patterns and they work. I'm not trying to say because you are seeing chart patterns on the 5 minutes doesn't mean it won't play out. It will play out. But the tendency of it playing out and not playing out is slim once it comes to the smaller time frame.
Yeah.
You are going down to the smaller time frame. Tendency of a chart pattern playing out gets smaller and smaller and smaller. So that is just it. Not that you can see the chart pattern on every time frame. It's on every time frame. And you can see the gold chart patterns. It was even clearer on the H1. It was even clearer, more visible on the H1 and the minute 30. But why? This didn't just form on the 30 minutes. You can see on the 1 hour, you can see it clear. On the 1 hour, you can see it.
Yeah.
You can see it. On the 1 hour, you can see it. And even the 4 hours, you can also see it as well, but not that too clear. You can see it. You can see it on the 4 hours. You can see on the 4 hours, it is very clear. So you can go down to the smaller time frame to get an early entry based on the chart pattern you saw on the higher time frame. You can see this on the 4 hours. It was super clear on the 4 hours. But most times on the 4 hours, 1 hour, you won't see any chart pattern. But when you start going down to a smaller time frame like minutes, 15 minutes, the 5 minutes, you start seeing some chart patterns. But if you go to the higher time frame, you won't see them there. But like this one, what gave me even more confidence on the 4 hour, the chart pattern was very clear on the 4 hour. I have to go down to the 1 hour, to get better execution. But this was a 4 hour chart pattern. It was very visible on the 4 hour. So most times you'll be like on the 4 hour, you won't see anything clear. Probably you have to go down to the smaller time frame, and all that before you can get the best. As you can see here, this second chart pattern, if I go down to the 4 hours, if I go down to the 4 hours, you'll see something. If I go down to the 4 hours, you can see this was actually just a retest. You can see this, it was just a rejection wick on the 4 hour. You can see it was just a rejection wick. Probably if I had chilled and waited for an entry on this one on the 4 hour, I would have probably gotten the trade right. Probably I would have entered as soon as I saw the price rejecting from this level. But since it was on the 1 hour, I was like, okay, I think it's already breaking below it. And I took a sell here. While on the 4 hours, it was actually still retesting the channel. So that is how it also goes with this time frame of 18. The higher the time frame, the better the chart pattern works. The probability is higher. But most times you can see a good chart pattern on the 4 hours and the daily, and it will mess you up. Let me give you an example on the NZD card. I anticipated an NZD card. It was a nice trade. A lot of people who trade chart patterns, they fell for this. A lot of people probably would have lost the trade because it was a very clear chart pattern that every chart pattern trader would have seen. You see, this was a normal. It was a very clear chart pattern that every chart pattern trader would have seen. You see this. It was a normal horizontal level. It later played out, but it didn't play out the way it was supposed to. As you can see, it's selling right now. But it should have sold at a particular level, which it did not. You can see here. This is what happened. This was what I was saying. Currently, at that time, it was actually rejecting from here. Normally, you can see that it was actually tether. You can even see it is even a daily chart pattern. You can see this is a daily chart pattern. This was an impulse, a correction. Then technically we are expecting for a continuation down all the way. You can see this is the third touch. This is the first touch, the second touch, and the third touch. But what I understand about this NZD card, that is why it is good to actually understand particular pairs. This NZD card, most times, a lot of the times, it will give you nice chart patterns, then it will mess you up later. Once you get in an entry, it will just like, just fake out and just do some crazy things, stop you out, go in the opposite direction for a long time, then before going in the initial direction that it would have gone to. That's what I understand about this NZD card, because I've experienced a lot of stop outs trading chart patterns on this NZD card. You can see here. Let me take this off. So you can see here, if I go down if I zoom in closely, you see that this was a superb nice sell. I mean, like everything lined up well, both the candlestick confirmation and everything. You can see here, first touch, the second touch. You can see here, even on the H4, you can see some nice pin bar here. You can see some nice pin bar. It's nice. These are H4 pin bar, which are superbly strong confirmation for a possible continuation sell. So this was how I took the trade. I actually took the sell, and I had my stop loss at this level, and my stop loss at the highs, and my initial target was this would have been a nice swing trade. My target was around this area. I was targeting like 200 plus pips, while risking like 20, while I was risking like 20, I was risking like 20 pips. So initially, on most pairs, it would have played out nicely. Went to some profits, then played around, and then stopped me out. You can see here, this was actually a chart pattern that formed on the daily, but still it was not respected the way it was supposed to. It just messed around, just messing around. You can see this. You can see. So this was what I later found out. I later saw that price was actually moving in an ascending type of nature, which should confirm See this?
Yeah.
So this was what I later found out. So I just had to like delete. I pushed this to the back side. And then this was what I was working with. Unfortunately, I didn't take it. This was what I started working with. I was like, okay, this price didn't respect the previous daily channel, but price is still moving in a reversal pattern. Price still feels like it's still moving in a pattern that may likely reverse, because if this ascending channel is found in an uptrend, there's a high tendency and possibility that price wants to reverse. So this was what I was expecting. I had a level at this area. So I had my level here. So this was what I later analyzed. I was waiting for price to come all the way to the top here, and then before like selling off. I was expecting to take a sell at that area, expecting for something like this to happen, to take a sell. Because this horizontal level, if you go to the backside, you see that price, this was a previous high.
Yeah.
So there was a high tendency for price to go back there before actually selling off. But unfortunately, I didn't get my entry. But you note that this was actually a pattern on the high time frame, which means it should have worked out perfectly, but it did not. Totally messed up. But most times you can see chart patterns on the 4 hours, on the 1 hour, and they will work out nicely. So it doesn't actually, when I mean by the smaller time frame chart patterns tends not to work like the higher time frame. It doesn't mean the higher time frame will always work. They don't always work. They don't always play out.
Yeah.
They don't always play out. So these are what these are just the stuff that forex traders need to know. Just because it's a higher time frame, it's forming on the higher time frame, which means it is going to work out. Then you now risk the house on it. Probably risk 50% of your account. Oh, this is a daily chart pattern, which means it should work. It should play out. Market will just mess you up, stop you out with like 2 pipettes before moving in your initial direction. The market wants to actually humble you. The market wants, it won't even stop you with a pip. A pip will be too big. Because if it stops you out with a pip, you have excuse to be like, okay, well, it stopped me out with a pip and all that. To stop you out with just 2 pipettes, mess you up, humble you before moving in its initial direction. That is why in the market, we are not actually Rambo. We are learning every day.
Yeah.
We don't have like, oh, it must. Since I took a buy here, market must buy from here. If you continue that, you blow your entire account. Market doesn't respect anybody. Doesn't have respect for anybody. On the early USD trade as well, you see, this would have been my nice TP target. You see, my TP would have been smashed on this US Euro USD. So these were some of the things that made me stop trading as well, because man, it was as if these market makers were just watching my entry and my stop loss. It was as if they were watching me. Like I was so upset, and like I was even thinking the broker was like manipulating shit on me, because as you can see here, this was they later play out. Every single trade I took that week, every single one played out. Every. So you see here, I got in on an entry here. You can see here, price was at the daily resistance level. You can see the nice rejections. I took a buy here. I had a buy from somewhere here. I took a buy from somewhere here. This was NFP week. It was NFP. I took a buy here. Non-farm payroll. I took a buy here. My initial target was there. Like in 1-4, 1-5 or so. My TP got hit. It was a nice one. That was on NFP day. Due to the NFP news, it created a lot of volatility that made my TP got smashed. But this was my thought process. Since you can see here, this was a reversal pattern. You can see another reversal pattern here. Another reversal. So most times we get the trade direction right, but we get our trades wrong. We just have to live with that. We won't get our trades right all the time, but a lot of times we'll get our direction right. But the trade will be the problem, will be what we'll get wrong. But this was what I actually saw. This was what I actually saw here. What I saw. I was seeing an ascending type of nature here, ascending channel here. What I was seeing here, you can see the first touch, second touch. This was the third touch. And I was like, okay, since price is actually moving like this, this was how I had my trade. I was like, okay, since price was actually moving in this type of direction, one thing again, this is more like me telling you that my stop loss was super crazy. I was like looking for sniper entries. This was the same reason I lost this trade, because I was looking for sniper entries, small stop loss and all that. See, this was my initial target, which would have already been smashed. You can see this. My initial target would have been hit, superbly swept. This was my initial target. You can see this. This would have been a nice win. A nice win of like 100 pips plus. I've been a nice win. But I entered on the sell and I had my stop loss at this level. I think I placed my stop loss at this area. Placed my stop loss at the area there. I was like looking for a 1 to like 20 risk to reward. As if my father was the owner of the market. What I was looking for. I was looking for super sniper entry. I mean, probably if it had entered, my psychology of a thing would have made me go on Instagram and WhatsApp status and start bragging. No, I'm the king of the first market. But unfortunately, the market slapped me hard in the face. After slapping me, it actually went down. As you can see here, technically, this is not how I trade. Normally, if I'm trading like this, I'll put my stop loss above the high, where it actually invalidates my trading setup. Where I know that if price comes to that level, that means my trade setup has been invalidated. That is a stop loss of a thing. Stop loss should be placed at level that invalidates your trading idea, the idea of the trading as a whole. Because technically, if price had moved all the way on to the top here, probably it would have formed a double top before going down, or would have broken above. But the momentum, technically, for price to move here will mean that there are a lot more buyers now in the market that are interested in this market. But unfortunately, this was more like a fake out, stop hunt, manipulation and everything, and I was stopped out. I lost that trade because I was looking for sniper entries, like other people. Instead of me trading as a swing trader that is trading my own kind of trading. So I lost that trade, and I also lost an Aud Jpy trade as well. I lost a lot of trades that week, I won't lie, a lot of trades. So I just have to like, man, no, I can't be doing this. I can't be doing this. I can't be doing this anymore. So I hope I answered your question regarding the chart patterns, which time frame they work on better.
Yes.
Okay,
You
so
know, somehow what has been confusing me
yes,
with like that gold.
yes,
Even when it was creating that pattern, I saw it.
okay.
I was like confused. You know, and now give me those touches, then draw back, and I know that was a kind of pretest.
Okay. Yes, of
So
course.
most time those patterns do confuse me. But
Yes,
what you have tell me now, I believe I will be checking on them.
yes, of course. You just have to be able to understand these patterns. Most times, they are not like super straight patterns. They will just look scattered and tattered everywhere. So if you don't actually know how it is, you can draw them. You draw them wrongly. I'm seeing something nice on USD JPY right now. I'm seeing something nice. I'm seeing a nice trade setup on USD JPY. I'm seeing a nice trade setup on USD JPY. Currently, prices at the a major high. I think it's a high of like since 2000, since years 2020. This year 2020 up until now, price has been unable to break above this high since 2020. You can see here it broke above it in February 2020, but then came back down and sold like how many pips? Let me see. How many pips? Let me see. Because as price action traders, what we use in predicting the future price is what has happened in the past. You see, while price moved over almost 1,000 pips, like 1,000 pips. Price moved 1,000 pips. And currently, you can see that price has dropped from here before. And it dropped, and probably people were lucky to get in. This was a nice ascending channel. And who got in at the eye, they made nice profits. Now, price is currently at that area now. Although I may likely take this trade, I may likely not take it. I may likely, because this is more like a reversal trade. So I need to have good confluences in order to be able to take this trade. Let me go down to let me zoom in. This is it. This is something nice. This is something really nice. Something really nice. Price is already struggling at the level. Price is, you can see how price struggled here and then sold off. Price is currently at that same area right now. It's currently at that price right now. And price is already struggling. You can see here price made a double top. Price has made some kind of a double top. I need extra confirmation because this is more like the Asian session right now. And I don't trade the Asian session. I do not trade the Asian session, but this thing looks really nice. This thing looks really, really nice. Really, really nice. It looks really nice. Wow. So I'll be waiting. If I'm to take this trade, I'll be more conservative and wait for the counter trend to be broken. I'll wait for this counter trend to get broken, and like probably for the aggressive people, aggressive traders now probably are already on a sell. Aggressive traders are already on a sell, but for me, I'm not too aggressive. I'm going to be conservative on this one and see how price plays out. In order to be able to take this trade, this is what I've been looking for. This is my area one. So this one. For me, in order to take the sell, because this is a really, really nice area of interest. This is an area, very interesting area to all sellers. Every trader who trades USD JPY, they are currently focused on how price action unfolds at this area because they are looking to go massive. They are looking to take big house trades, huge trades off of this area. They are looking to either take buys or either take sells from this area because however the price moves, it's going to move really, really nice. It's going to move really, really nice. Since I'm already anticipating a possible let me see, the DXY. The DXY is approaching an area where it might likely sell off. So during this push to the upside, if it ever happens, during the push to the upside, we may see some crazy moves in the market. Let's just put our price at the top here. Let's see how price is actually approaching this high there. Because we may likely get a sell-off at this zone as well. We may likely get a sell-off at this area as well. Price is kind of struggling. Right, it's kind of struggling at this area right now. Struggling. Price may likely sell off from here. And likely sell off from here because we see a pattern inside a pattern here. You can see here because this is the high. This was the previous high. This was the high point of the previous. This was like in August. This was the high of August. And currently price has gotten to that point and is forming a possible reversal pattern. A reversal pattern. There, price is on a reversal pattern, which is very interesting. It is really very interesting. For me, as a conservative trader, I wait for price to actually break below all these lows, retest. I will do something like this. I will break below here, come back here, retest, do something like this. Come break below this to retest this area before I consider selling from here. Before I consider getting in on a sell there. So if this can happen, if this happens, then we'll expect this USD JPY to actually play out nicely. Because if we get a weakness on the dollar, that means we'll get a possible confluence, more confirmation to go short on this USD JPY, because USD JPY is looking nice right now. It's at a major level of resistance. The opposite can actually happen. Okay, get price that come up here, retest, trap the traders on the wrong side of the market. Probably traders will feel, oh, price has already broken above it. We are likely going to get a retest for a continuation buy. As me just go up a little bit, then boom, we just destroy people's accounts and then continue selling. As whenever price is at major levels like this, it is best to sit and just watch how price does. Best to sit and watch how price does. For me, if I'm going to be taking a sell, like I said, I will need price to break not only below this trend line, I will need price to break actually below this moving average, as well as this horizontal level, give a nice retest with a nice candlestick confirmation, probably a bearish engulfing bar, let's say pin bars, rejection wicks, kangaroo, tail, whatsoever, before I hop in on sells. Price can as well retest, break above the retest. If I want to take long on this market, I will just wait for price to properly retest, break above it. Because what happens most times, what I've seen and what I've confirmed that actually works, most times when price break above a level, if it doesn't break it properly and retest, it actually trap traders and it reverses. But whenever price actually break above it properly, like price really make nice swing, like let's say price swings up, comes back to retest, we get possible continuation. But if you just see price pins above it, let's say price pins above it and just retest, most likely than not, it is a fake out and price continues in the opposite direction. But if we get price to break out properly, then I'll be taking this trade as a break and retest to go long. So there's a probability and possibility. There's probability and possibility. For my longs, that is a possibility. What may possibly happen, these are probabilities. What may probably happen. So this is what I've just seen on the USD JPY. I've been eyeing it for some time now. Technically, it has nice confirmations like the ascending structure, the price is at the major resistance level. Then I'll be waiting for a break and retest. Like I've shown you on the NZD card, you can see how price was like super nice with that ascending channel, and they ended up messing traders up. So that is how. That is why we need to be patient as traders and let the market play out. Probably we get into the market too early, and it ends up going in our initial direction, but we enter too early. And most times we enter too late. When the market goes in, when the market had already made its moves, that's why we just need to find a way to enter at the right time. There's no right time though. It can never be right. This is what I'm actually expecting. For a possible break below this level, below the trend line as well, and a retest to go long. I missed the long trades. I had already anticipated a buy here as well. Let me see. On this trade, I anticipated a buy, which would have been good, which would have been a nice one, but unfortunately, I was not there to take it. It was a nice one. It was a nice buy setup. Nice buy setup. It's a double bottom break retest continuation for the buys. So this is what I'm just looking at on USD JPY for now. USD JPY for now is at a good, nice area. So you may expect manipulations. The price is going to be manipulated, likely going to be manipulated here because these big hedge funds and all those people, they know that all traders have their eyes on this particular location, this particular zone. So they're going to manipulate price, stop a lot of people out, gather liquidity to move in the right direction. But before that, they're going to stop a lot of traders out. Even now, probably there are people who are already selling. People who trade just support and resistance are already selling. Or these people, they might have taken their trades here and be like, oh, this is a nice support and resistance trade. Put my stop loss here. But what price may likely do, since these guys already know that a lot of people are already in this market, they may just take price above, boom. Price may just come down, feel as if it is going to like continue buying. We just come down here, retest, and continue selling. But by doing so, they've gathered enough liquidity. They've stopped out a lot of traders who are impatient and who just trade mere support and resistance without extra confirmation, without being patient. Without being patient. And it can also happen the price may just likely come down from here and be like, boom, boom, and go all the way. But for me, I'll wait for proper confirmation. If it goes out without giving, if it goes in my initial direction without giving me my confluences, my confirmation, it is best I miss out than take trade that goes against my trading rules. For me, I'll wait for a break below this pattern, a retest, as well as a retest on this moving average, and a possible continuation to the downside after confirming, getting proper candlestick confirmation. That's what I'm expecting on this level. So I'm going to be just observing it. However it plays out, probably if I'm on the charts, I'm going to also let you know. If I'm going to be taking any trades, I'm also going to let you know how I'm taking the trades, why I'm taking the trades, and what I'm expecting to happen on the trades. So this is a very nice area. I'm going to be looking at this, just observing and know how it plays out. Just know how it plays out. So any more questions?
Yeah, there's not too much question, but there is something about the GBP pairs.
Yes, the pound.
Yes, I discovered that anytime I take trade with those pairs, whether the GPUSD or GPJPY,
yes,
I always get knocked out.
the GBP pound is very volatile. The pound pair is very, very volatile. It moves crazy. It is very volatile. That is why most times if you're trading it, you get stopped out a lot. And most times after getting stopped out, it goes in your direction. It is just normal.
Yes.
It is just normal. It happens. It happens because it is volatile and this is the market. Most times we may have losing streaks, like 5-6 losing streaks. It doesn't mean the market is like observing us or watching where you're placing your stop loss and all that. It is just normal. It happens. That's just a normal thing. It happens. You can get stopped out and then price goes in your direction. That is just a normal thing. It happens to everybody. It happens to everybody. And most especially because the pair is volatile. It's a very volatile pair. It can spike up and then move down sharply. So if you have your stop loss too close to your entry or at a very wrong position, it will stop you out immediately before spiking directly to its target. It is a very volatile pair. A very volatile pair. That is one of the reasons why it stops out before like going into direction. It's very volatile.
I want to know with that the touchings,
Yeah.
when you find a chart pattern,
Yes.
must the chart pattern must it hit 3 touch
Uh,
before?
technically, for me,
Yeah,
if I'm looking for those chart patterns, if I don't have that third touch,
yeah,
if I don't have that third touch, that is not a good confirmation. When you get that third touch it is what you've seen that works. It works. The third touch. You can
okay,
search it on Google and all that. There are books written regarding that particular kind of trading. You always wait for the third touch in order to get good entries or in order to get proper confirmation that that chart pattern, that flag or
yeah,
channel will actually hold. That is more like a more confluence that the chart pattern will actually
yeah,
play out nicely. So for me, I wait for that third touch. It doesn't always happen. Most times, it just gives you 2 touches, then it moves in the direction. But for me, I wait for that third touch. Like a trade on the Aero UD. This was what I analyzed on Aero UD. You can see here. I saved the chart to my PC. You can see here. This was the first touch. The second touch. So I
yeah.
was actually anticipating for the third touch before I take the trade, which never happened. But trade went ahead. I mean, let me just put here in RUD. Trade somehow moved. Let's see. Oh, I think the third touch later happened. So let's see. Nice. It later happened, but I was not on the charts then. I was not actually watching the charts. Nice. I was not actually watching the charts when this one happened. I just analyzed and left it. I just analyzed and left it. You can see here. You can see here that price had even more than 3 touches. Price had even
Yeah.
more than 3 touches. Even more than 3 touches. See here the price had even more than 3 touches. Like first touch, second touch, third touch, and even a fourth touch. Probably I would have gotten stopped out on this one in profits though, because as soon as this would have been my entry, this was the third touch that I was anticipating. So this was the third touch I was actually anticipating. It was here, It's actually the third touch I was anticipating for. Third touch. Price went up again and started creating another pattern. Normally, on a normal day, if the pattern actually wants to play out nicely, as soon as it gives you this third touch and confirmation, price should likely sell off all the way down to the beginning of the channel, technically. But you see here, price made the fourth touch. On that, it
Yeah.
actually invalidates what is actually invalidates this trend line of this pattern of 18. As you can see here now, price made the fourth touch, but started forming another pattern. As you can see here, it's actually making a descending channel, kind of.
Yeah.
See this? See what happened? You get? See? You see, this was the first touch, this was the second touch, and this was the third touch. Price sold, price bought afterwards, and You can see currently the price has already even broken the top of the channel. Price has already broken. So if price wasn't going to form this new kind of channel, it should have sold from here all the way down here, possibly probably to the 92% or 90% rule of the retracement. We have sold 90% of this entire move. But you can see here, price invalidated that bias by creating another channel.
Yeah.
You see here, price created another channel. So that was why this third touch actually got invalidated and didn't play out as much as it should have played out, although probably whoever took it would have banked nice profits. Because this would have been the first take profit level. First take profit, then your initial take profit would have been at the lows here, probably closing 50%. As soon as price hits the trend line, then if it's able to break, it continues. So you can see here, this was what happened, and this third touch was invalidated by another formation of another type of channel. So currently, I'm expecting, let's go down to the 1 hour time frame. So price may likely continue from here to the top. It may also break below to the inside and then retest. Price may also do something like this. Price may either go from here all the way there, or it may actually break below, retest the trend line before continuing down again.
Yeah.
So that is what price may likely do, but technically, since price has already broken above the trend line, it should buy. Technically, it should buy, but the opposite may happen without anybody's permission. Without without getting permission from anybody. So this kind of trades that are not too clear, preferably I would just avoid them. If I was to take this trade, I would have taken it at the third touch here. At the third touch here. First touch, second touch, third touch. First take profit here, and the second take profit would have been at this level here. At this level here, as you can see here. Second take profit would have been here. Second take profit. But those are the best entry levels. Those are the best entry levels. Most times we decide to take trades when the move had already expired. That's when we take trades. That's when we take trades. When the move had already expired. So for me, I would have taken a buy from here. I prefer to take buys at this bottom. Buys at the bottom. Like sells here as well. Sell. Buying from this bottom is risky. Because price can just like break below its retest and then you lose your position. Because you were trading against the pattern. So as you can see here, this was what happened on the Euro UT, which would have been a nice trade though if I had taken it, because on here you can see here price did go up to touch the pattern. Price did go up and made a nice confirmation. Unfortunately, it didn't get all the way to my TP, which is normal. So that is it. Any more questions? Any more questions? All right. Okay, I think that will be all for today. So maybe it is some other time. Have a wonderful night's rest and peace out. Okay. So I'm going to be ending the webinar now.
Okay.
Yes, I'm feeling sleepy now. So probably when I'm about doing my Sunday weekly analysis, you can hop on as well. So you can know how I will be analyzing my charts from like top down, what I'll be looking to take, why I'll be looking to take trades at particular areas. And when I actually take the trades, I'll actually send you the signals as well so you can enter if you are willing to.
Okay.
All right, all right. Have a wonderful night rest.
Thank you very much.
You're welcome.
Thank you.
All right.
Good night.
Good night.
Yeah.